This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Three-day losing streak on the S&P. We get a bounce. Futures up 1.4% on S&P 500 futures. On the Nasdaq right now at 1.9. On the Russell up by 1.7. A bounce in equities, a bounce in yields too. Switch up the board and get to Germany. Get to the US, the Treasury market and the bond market respectively. Yields higher, 2s and 10s across the curve here. Up 2 basis points on 2s, getting back towards 160 at 159.38 on 10s. North of 2% on a 10-year Treasury. You just get the feeling when risk gets out of the way. When the story around Russia just moves to the side, yields want to go higher. In Germany, too, up another 2 basis points on a 2-year yield. On a 10-year, 30 basis points. We haven't seen this stuff for quite a while over in Europe. I know it doesn't sound like much, but in the context of what's happened over the last few years in the European bond market, 30 basis points is something that some people will take. Up another 2 basis points on a German 10-year. That's the story in the bond market. Let's get to this, Tom. I know you've been looking at it. Euro-Swiss, just capturing the story around the tension around Ukraine. That currency pair is now positive in the euro's favour. That means the Swissy is weaker. Euro-Swiss getting back to about 1.05, up 1/3 of 1%, and crude just backing away, down 3%. It's all about perception right now, Tom. And the perceived de-escalation, I stress perceived de-escalation of the last 24 hours.
At least in the jumble of headlines, there is a sense of de-escalation, but I think everybody's got their radar up from Moscow to Washington to Kiev. I would also note the VIX at a 32 level in the angst of a number of days ago into 26.35, much better than the 28-29 level yesterday. Jay Bryson is chief economist at Wells Fargo, and to be kind, has a number of years of experience here. Jay, how has Wells Fargo recalibrated global GDP? I see a lot of people all over the place on real U.S. GDP, nominal U.S. GDP. What is your global statistics for growth?
Tom, we're thinking we're looking at, a 4% sort of number this year on a global basis. Now, just to put that in perspective, if you go back and you look at, say, the last 40 years, you take the average of that, 4% is above the 3.25% average over that last 40 years. But, I think when you look at next year, we're looking at a below trend growth rate for next year. So we're kind of getting a bounce off of the tail end of last year. But as we go into next year, we think it's going to be a subpar sort of year for growth.
Do you see the glide path, the struggle within monetary policy being a struggle that will have stability of markets, stability of growth, or do you see instabilities out there?
Tom, I think it's going to be volatile here for a while. The Fed has a very tricky road ahead to play. What it's trying to do is keep inflation expectations in check. It's trying to show that it's, it's on the ball here. It's going to be raising rates so we don't get inflation get out of control. But at the same time, you don't want to be tightening so fast that you choke off the recovery. And the same goes with other major central banks around the world. The ECB has moved to a more hawkish pivot as well. So until you start to see inflation start to subside and that the central banks can start to relax a little bit, I think they're in a tricky situation, and I think markets are going to remain volatile around.
They might remain volatile, but are markets underestimating the dynamism that you're seeing with respect to the consumer and spending, despite the University of Michigan sentiment data, which sometimes can be an outlier?
Yeah, Lisa, to your point, I mean, University of Michigan, I think, is somewhat of an outlier. It reacts more to price pressures than what it does to, say, the labor market, like the Conference Board number does. But so when you look at the underlying fundamentals of the economy now, the underlying fundamentals of the economy generally are good. Household balance sheets are probably in the best shape they've been in 2 decades. Business balance sheets are also in generally good shape. So the underlying fundamentals are good. The question is how much of that spending actually does show up in terms of real economic activity here and the interplay with the Fed's tightening of that policy as we go forward.
Well, and sort of the threshold here, Jay, that a lot of people are looking at is they're expecting a deceleration, a peaking out in inflation, which some people think is happening now. But we don't hear as much how quickly inflation needs to come down to sustain that consumer spending. So what are you hoping for? What are sort of the bandwidths of outlooks that you see in terms of how much inflation could go down or not go down, and it could mean a bifurcated outcome for the U.S. economy?
Yeah, so I'll tell you what I'm hoping for. I'm hoping, and what I think is going to happen. What I'm hoping for is at the end of the year, you're looking at a core CPI inflation rate down around 2%. I don't think that's going to happen. I think at the end of the year, I mean, our forecast at the end of the year is the core CPI inflation rate is still running above 4%. And largely because what's happening here is service sector inflation is starting to pick up. If you measure good housing prices, now, the way it comes into the CPI is, a little bit technical. I'm not going to get into all that, but it comes in with a relatively slow lag coming in. And I think it's going to cause inflationary pressures in general to be strong. And we look for consumer spending to decelerate over the course of the year. We don't look for it to fall apart. But growth in consumer spending, we think, in the out quarters of this year is going to average roughly 2% in real terms.
Jay, let me go inside baseball. Completely unfair question to our global chief economist, but you can do it. What does PPI signify today? You and I are enough of fossils where we remember when the world stopped for 3 levels of PPI statistics. It seems like all of a sudden we're back to that. Does PPI analysis matter?
So first of all, Tom, speak for yourself in terms of the fossils there. But in terms of PPI, what it generally measures more so than the CPI is more of the good side of the economy. And the good side, it's important, but keep in mind that the good side of the economy in terms of consumer spending represents only about 1/3 of it. So it does give us some information in terms of pricing, and if the PPI then feeds into the CPI. But it's not a 1-for-1 sort of transformation there. So it's important, but there's much more weight that you need to be putting on the CPI than the PPI.
Jay, as we look forward, it is Jay Powell, central banker to the world. After what we saw with the Bank of England, after what we saw, the shock of the ECB 10 days ago or so, how much of a level is Jay Powell, central banker to the world?
Well, obviously, the Fed is still the most important central bank in the world. The U.S. economy is still the largest economy in the world. The U.S. economy right now is also leading the world in terms of growth, or at least the developed world, in terms of growth and in terms of inflation as well. And so clearly, what's happening here in the U.S. has a big impact on what's happening in the rest of the world. So, I think the Fed is still probably, I would characterize it as still the most important central bank in the world.
Jay Bryson of Wells Fargo. Thank you very much, Jay. As always, good to catch up. That meeting between Chancellor Scholz and President Vladimir Putin has started about 50 minutes or so ago, Tom, in the last hour or so. Getting some headlines from that. Just as it was starting, it was broadcast on Russian TV. Russia has been a reliable energy partner, quote, for a very long time, for decades, the Russian president said, Tom. There hasn't been a single failure in the supply of energy from Russia in all these decades. Everything is done on market principles, and there are absolutely no questions and doubts here. The focus on energy, Tom, as that meeting was starting.
No, the focus on energy is a price, and you can see it. I don't have nat gas in front of me, but I got Brent crude 93.46, which, John, is not $60 a barrel. I looked at the Bloomberg Commodity Index today, which bundles everything in, softs, metals, all of it. And I'm sorry, I'm not going to say it's a super cycle, but I get the attention the commodity bulls are giving to the Bloomberg Commodity Index, and that's a backdrop here of commodity Russia serving those that do not have energy.
Everybody's trying to work through various scenarios, Lisa. This came from Mizuho. If Russia did invade Ukraine and Western powers activate these draconian sanctions they have been threatening, I would expect to see WTI crude oil trade to levels around 125.
Wow.
They conclude by saying there is no spare capacity. That's the headline there.
Well, and I think that really underscores the fact that you're going to see these fluctuations that are so great because there isn't necessarily that flexibility with respect to the increase in production that you usually see when prices go up this much. And also there's a lot of uncertainty, especially with storage facilities so low on supplies. There's an uncertainty about how much demand is going to pick up. And so that's why you get these ranges from 150 down to 60, and it's all over the place.
Incredible. Tom, I'll read out some more of that note from Mizuho. Crude oil markets are already tight, and Russian aggression in Ukraine threatens to take that tightness and the associated price level to the next level. That's the fear around the story, at least permeating through markets more recently. And as we unlock some of that and just let some of the steam out of that argument, crude lower by 3.3% now. Near session lows, Tom. WTI at 92.18, Brent pulling back as well.
We're beholden to the headlines, and after the panic of yesterday, obviously better statistics is seen on the Bloomberg today. John, what I would suggest is it's multiple fronts of one thing, what diplomacy does, which is drive with control and with containment a dialogue forward. And the key attribute here is how do we allow Mr. Putin to save face internationally and critically domestically as well. That's what Ned Price at the State Department and others are talking about.
That seems to be the job of Chancellor Scholz through this morning, Tom. Looking at the bond market as well, you want to push the dialogue forward. Yields up on 10s by 5, 3.2%. On 2s by 1, let's call it 160, 159. Tom, the conversation around the Fed picks up speed tomorrow, Fed minutes, then just a ton of Fed speak. It all gets squeezed into the back half of this week.
I'm worn out by Fed speak.
Are you done?
I just say that I'm just so done. I just...
Who you fed up with the most? Regional Fed presidents, the lack of it from Chairman Powell? What's upsetting
I'm fed
you?
up with Powell not going on the edge of Greenspan and saying enough. I understand there has to be a modern communication, but I'm sorry, it's out of control.
You want him to get hold of the narrative. I hear you. I'm with you. Is that what you want?
I will leave it to pros and historians, people like Lawrence Summers and David Blanchflower and the rest, John B. Taylor out at Stanford, who helped me so much years ago. John, these pros have to figure out what modern communication is. It isn't what we've got right now. It's ridiculous.
If you leave space, someone's going to fill it. And right now, Lisa, the regional Fed presidents are filling it.
Yeah, Jim Bullard is actually taking the front and center. Honestly, though, how do you take hold of a narrative that's so squishy?
And one that's got away from you.
Yeah.
Squishy CFA level 4.
Well,
Great
it's
job,
just
Lisa.
so uncertain. Honestly, it's tough.
Bramo, TK, Jonathan Ferro, futures up 1.4% on the S&P from New York. This is Bloomberg.
Keeping you up to date with the news from around the world. With the first word, I'm Rishka Gupta. Russia has announced that some of those troops involved in drills have started returning to their bases. The military exercises had raised U.S. and European concerns about a possible attack on Ukraine. The Kremlin has denied it's planning an attack. The U.S. is continuing conversations with China despite Beijing's failures to live up to a trade agreement. But Bloomberg's learned that process could soon come to an end. The Biden administration officials consider it unlikely that China will make any further concessions. U.S. trade data shows that China isn't buying the amount of American goods that it had agreed to. And Hong Kong says it's overwhelmed by a growing Omicron outbreak, but there are no plans for a city-wide lockdown to bring the number of cases back to zero. Hong Kong is searching for more hotels to use as isolation facilities. And Elon Musk has reported that he gave about $5.7 billion of Tesla shares to charity in November. The donation was one of the biggest ever. The name of the charity wasn't in the filing. A large charitable donation would help reduce what Musk claimed would be the biggest tax bill in U.S. history. And the world's top tennis player says he will not get a coronavirus vaccine. In an interview with the BBC, Novak Djokovic said he's willing to sacrifice trophies and skip Wimbledon in order to avoid a COVID shot. He said freedom of choice is at stake. Last month, Djokovic was deported from Australia after a protracted dispute over his vaccination status. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry.
If Hunter's last name was Trump, that's all anybody would talk about. That's a big problem for this country moving forward if we have a two-tier justice system.
Weeks has made it clear it wants to go higher.
And Sean, where are the prosecutors right now? You know, the same prosecutors that'll go after my father every single day for nothing, right? Just because they want to
as far as Hong Kong is concerned, we need to find our own way out of this epidemic. I will have to say it very clearly that we have no plans for any widespread city lockdown as you have seen in some of the other places.
Carrie Lam there, the Hong Kong Chief Executive. From New York City with Tom Keane, Lisa Bramett, I'm Jonathan Ferro. Futures are up, TK up by 1.5% on the S&P and the Nasdaq up by 2.2%.
Very good, John. Thank you so much. You caught me unawares there, John. I thought you were going to do a ginormous data check there, something large and, substantial. Let's see what we've got. Futures up 67. Dow futures up 390 right now. And again, the VIX giving me really good news. We're going to get a 25 VIX here in a moment, and that shows good news. There's also good news on the pandemic. What I watch more than anything is the moving average, the rate of change of the deaths, and the answer is it's very, very good news. And yet, Amish Adalja joins us now on the And Yet Senior Scholar, Johns Hopkins Center for Health Security. Dr. Adalja, good morning to you. I want to talk today about reinfection. The Duchess of Cornwall, Camilla, is reinfected. Prince Charles is reinfected, and a good part of America seems to face reinfection. The unvaccinated get more reinfected. What do we need to know this morning about getting COVID a second, a third time?
So when it comes to coronaviruses, their ability to reinfect is basically how they survive. The 4 coronaviruses that cause 25% of our common colds, they reinfect us after a year pretty much routinely. And that's the way this is going, especially with the Omicron variant, which is able to get around some of the protection that our antibodies provide, some of the protection our vaccines provide. It seems to be that reinfections are going to be more common in people who are not vaccinated, because when you look at what's most protective, it's something called hybrid immunity, the immunity from vaccines plus infection. And reinfections are something not to worry about if they're mild. They're to be expected, and that's why we have to sort of move the focus to severe disease. But to make sure that your reinfection is a mild one, it's best to have the hybrid immunity, or to be someone who's been vaccinated after your infection.
May I suggest as an amateur that reinfection is normal within an endemic virus, an endemic pathogen?
That's definitely the case. And as I said earlier, that's what the other coronaviruses do routinely. So we can expect reinfections to occur, and those reinfections to be generally mild, especially if they're occurring in somebody that's been vaccinated as well as had prior immunity from infection. But in general, we shouldn't panic about reinfections. They're going to be what happens. All of us are going to get this coronavirus probably multiple times, just like we get other coronaviruses multiple times. But they're going to be mild because we've got all these tools to deal with them to make them much more likely to be like the other coronaviruses that cause 25% of our common colds.
Dr. Adalja, the world is moving on, with the exception of China. And Hong Kong in particular is seeing the cases get away from them. Carrie Lam, the chief executive of Hong Kong, speaking in a briefing this morning, said the scale and speed of the spread of the virus has overwhelmed our capacity in the fight against the pandemic. What kind of visibility do we have, not only on the spread of the virus, but also the potential variants that could emerge with people who don't have those levels of protection you're talking about?
This virus is going to continue to be able to generate new variants, and it's most likely to occur in low vaccination, low natural immunity populations where the virus really doesn't have much to check its spread, so that it has the ability to try out new mutations. I think that China is a place where they don't have a lot of natural immunity, where their vaccination campaign hasn't been the best, and they've been using lockdowns instead of the actual precision-guided public health tools. So I do think that places like Hong Kong, places like China, as well as much of the developing world where vaccination rates are low, are going to be a continual place where new variants emerge. And that's why it's so important to get first and second doses into people's arms around the world if we're going to be resilient, because there are going to be new variants.
But looking forward, Dr. Adalja, how much visibility do we have in terms of tracking any variants that do come up, so we don't get blindsided by another variant that comes over? I mean, honestly, this is one of the criticisms when the pandemic first was spreading around, and you wonder whether that's an incubation right now for something similar to happen again.
We certainly don't do enough surveillance of variants. We only see kind of the tip of the iceberg because many places don't sequence routinely, even in the United States. We still do just a moderate level of sequencing, so we miss a lot of variants that are emerging. However, we are getting better. This is a priority, and it has to be a major priority because if we're going to stay abreast of this virus, if we're going to know when we need to adjust our vaccines, if we're going to know which monoclonal antibodies to use, which ones not to use, all of that's going to require a lot more situational awareness than we have. So it really is incumbent as we try to kind of sustainable approach to this virus to have high levels of sequencing capacity all around the world so that we're not left kind of in the dark about what's circulating, what the dark matter is in this virus.
Doctor, thank you. Good to catch up, sir. As always, Emma Shadowja of the Johns Hopkins Center for Health Security. In this market, we're trading on some sarcasm yesterday, whipsawed by the ironic statement from the Ukrainian president, which I have to say, Lisa, was incredibly difficult to read for any market participant to put out a comment like that. To say it's one thing, but then to write it out as well in a separate medium is bound to get the wrong kind of attention.
What was it again? That he expects the attack to happen on Wednesday?
Something like that.
Honestly, the idea here, though, is he was trying humor at just how specific people are getting at a time. How does an algorithm trade off of that? I mean, this is what I was thinking about. When you take a look at the swings.
You wanted to start reading sarcasm.
I mean, how do you filter out the sort of human subtleties if that's really what that is?
It's a serious moment. We're going on headlines from the Foreign Minister, Sergei Lavrov, Tom. Troops partially returning as drills have been completed. We'll look to some verification of that, hopefully, through the next few days, TK. Beyond that, there's a meeting right now with Chancellor Scholz and President Vladimir Putin, looking for the headlines on the other side of that meeting.
Yeah, we have to exactly look for the headlines on the other side, and what that's going to lead to is a reaffirmation for a market, John, of everything on the screen with the VIX trying to get under a 26 level. NASDAQ 305 up 2.2% is an improvement in the last 20 minutes.
It's a big move as we drain some of the drama. Just drain some of the drama away from this story for now, for a moment. Futures with a lift, yields are higher too. We can take a look at the board, Lisa. 10-year Treasury yields breaking out again. On a 2-year yield, a bit of a lift here too, up 5 basis points on 10s to north of 2%. That seems to be where we're getting comfortable at the moment, Lisa. Life above 2%.
Which is kind of shocking, considering that a lot of people didn't see this happening until the end of the year, and a lot of people shrugged this off as an impossibility in the near term. I'm struck by the NASDAQ, though, actually outperforming at a time when yields are continuing to climb. And has this really been the washout as the Bank of America survey comes out and shows that a lot of investors surveyed are the most, or the least allocated, I should say, to tech stocks going back to 2016? Have we seen capitulation, even though we haven't seen necessarily some kind of dramatic swoon?
We can discuss that BofA Fund Manager survey through this morning. I'll catch up with BofA a little bit later. Bearish, but not extremely bearish.
I heard that.
And perhaps not bearish enough. Seems to be the takeaway, Tom, from the BofA survey.
Yeah, again, it's just the levels, and it's the parlor game we're in, John. And just to try to get away from Russia, Ukraine, and the geopolitics, PPI is, again, I'm going to call it secondary, John, but at this point, secondary data points really matter on the continuum of getting to the jobs report and then on to March 11, 12.
There's a ton of nervousness around the inflation data. Any read that the data can provide us with, Tom, will get the attention. The attention will be on PPI, 8:30 Eastern Time. And then tomorrow, we get some minutes from this Federal Reserve meeting. Who will those minutes be a platform for? I wonder. We'll see. From New York, futures up 1.5 on the S&P from New York City. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, it seems as if inflation has nowhere to go but up.
I think the Fed needs to just take it easy here in normalizing policy.
We got a hot mess here.
Although inflation is a front and center problem right now, over time it will work itself out.
The last thing the Fed wants to do is to raise policy rates too aggressively, flatten out the curve, and lead to a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
There's a big bounce in this market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. TK at 1.5% on the S&P, on the NASDAQ up by more than 2 percentage points. There is a perception shift at the moment in a big way.
Perception shift as Stoltenberg just starts to speak on NATO. We'll monitor those headlines as we're looking at Moscow as well. And John, to me, the major message is an improvement in the last 60 minutes. We're literally staggering hour to hour in the last 60 minutes is a good news hour.
The foreign minister of Russia, Tom, Sergei Lavrov, validating that perhaps partially, saying that troops are partially returning as drills have been completed.
Yeah.
We want to see more of that, just a little bit more of that, Tom, through the next few weeks, days, and months for that matter as well.
Diplomacy is a science of adverbs, and we're getting lots of adverbs today. Schultz really hasn't spoken yet, John, and I think that's the key thing we're looking for here. But I really want to make clear, John, all the different news organizations seem to have a different treatment of the ebb and flow of Russian action in the last hours, and the market on the Bloomberg terminal, equities, bonds, currencies and commodities, oil lower, is voting good news.
The conclusion of Stoltenberg right now, Tom, seems to be in line with the conclusion of market participants that things have improved. Here's the headline. Signs from Moscow are cause for cautious optimism. I would go with the cautious optimism, Tom, but I think you and I both would lean towards the cautious part of that optimism a little bit more.
Yeah, what's so important here is the nicety of the Black Sea, as Joe Matthew talked about in the last hour. Stoltenberg visiting Romania in recent days. John, that's a hugely symbolic deal, John, to see Romania as a late entrant to NATO and not buttressed up against Ukraine. Moldova's in the way there, but nevertheless to see the the head of NATO, rather, in Romania in the recent days, that's a signal to Mr. Putin.
Elisa, Chancellor Olaf Scholz meeting with President Vladimir Putin right now.
It seems as though things are headed in an optimistic direction, at least for markets. I'm wondering, though, how long it will take before people start to worry about inflation again. I mean, we get in 90 minutes time that PPI report, and so right right now there's a sigh of relief and you're seeing yields tick up and you're also seeing stocks tick up, including tech stocks. How long before we get some inflation read and people start worrying about the downside surprise from the Federal Reserve? I mean, you just start wondering about all of these risks out there and how they factor in at different moments.
Do you like the way Bramo did that, Tom? That you put one worry to one side, it unlocks high yields, and high yields unlock another worry, and that puts equities back down again.
Look, what's amazing is she's linked Moscow into the 3-year auction that's coming up.
20-year auction.
20-year auction. Okay, run through the supply in just a moment. This is the price section. Up by 1.5% on the S&P. On the NASDAQ 100, up by a little more than 2%. We unlock a rally in the equity market. We unlock high yields as well, up 4 basis points on 10s to 2.03%. And crude heading south, lower negative, Lisa, down 3.5%.
The volatility, the degree of volatility in oil prices is really notable given how much the diversity of views has shifted over the past few weeks on some of these tensions. You can see oil prices down at one point nearly 4% after rising to the highest level since 2014. Olaf Scholz is meeting, of course, in Moscow with Vladimir Putin. It is the first in-person meeting. How much does the outlook for oil bifurcate depending on the outcome of, frankly, this meeting and a host of others that are happening this week? Ellen Wald is joining us, senior fellow at the Atlantic Council at 7:45 a.m. She sees the potential for oil prices going back down to the 80s level if the tensions do subside. On the flip side, heading above $110 if the tensions persist. 8:30 a.m., how does this feed into inflation? Do we see a peaking in inflation? U.S. January PPI. And we do get, of course, this as some of the inflation expectations over the next 2 years start to come down just a little bit. But Tom, when you were talking earlier about how important every inflationary read is, I couldn't agree more. It is a jumpy market. You could see implied volatility right now in the Treasury market rising to the highest levels since March 2020. And at 2:15 p.m., the Senate Banking Committee is going to vote on moving forward the confirmation of Jay Powell as Fed chair, as well as Lael Brainerd of Federal Vice for the vice chair position. Sarah Bloom Raskin, highly controversial for the vice chair of supervision, and Lisa Cook and Philip Jefferson for members of the Board of Governors. How much pressure at a time when Joe Manchin seems to be leading the charge and pointing the finger at the Federal Reserve to tackle inflation head on? We all have a responsibility to all that is possible to roll back inflation and manage our debts. He talks about economic pain stemming from the longer the Federal Reserve waits. How much does this complicate, John, as you were saying earlier, the vote on who they should confirm, why they should confirm, and what they want the Fed to do? It gets really tricky.
It gets really tricky and very quickly. Lisa, thank you. Thank you very much. Just want to pick up on those headlines, Tom, from the NATO Secretary General Jens Stoltenberg. The first headline, signs from Moscow, a cause for a cautious optimism. Yeah. That's reflected in this equity market at the moment. But I think we'd all agree on this, Tom, from Jens Stoltenberg. No concrete signs of de-escalation yet. No concrete signs of de-escalation yet from the NATO Secretary General.
And again, waiting to hear from Moscow. We'll bring you those headlines. And again, lining up the four things I'm worried about. I see 2s10s much better. Curve steepening here over the last 24 hours, 40, even 39 basis points, 40 basis points, up to 45 basis points, 0.45% difference in yield between the 10-year and the 2-year. Right now, Gabriela Santos joins us, global market strategist at JP Morgan Asset Management. She writes one of the clearest, most detailed notes on the street with a real sense of international affairs. Gabriela, thank you so much for joining us. I love what you say. Throw out the blueprint. Okay, brilliant. What's the replacement? What is the new blueprint that matters?
Hi, Tom. Good to see you. So I think that's ultimately what we're trying to figure out this year as investors, right? The market is pricing in today what's going to be a transition year for the economy from pandemic recovery to post-pandemic expansion. It's one where we have more optimism about growth, but we're also a bit more concerned about inflation. So it does mean a different withdrawal of liquidity than we had post-financial crisis. That's not the blueprint. Now we need to figure out what the new blueprint is. And I don't think investors have a clear read on that, and neither do policymakers. They're trying to figure that out real time, out loud, with several Fed speeches. And there's so many permutations we can come up with, right? In terms of rates and balance sheet, timing, pace, endpoint. So ultimately, we do think volatility is going to stay higher for longer. That means making big outsized bets on a tactical positioning is really difficult this year.
Gabrielle, I know you speak 4, 5, 6, 8 languages. I mean, that's what you do at Pennsylvania, but the answer is you speak Greek. Let's go alpha, beta right now. You say within investment and finance, alpha matters. What is alpha and why does it matter now?
So beta is just really the kind of return you can get just by being invested in the market. Alpha is the kind of excess return you can generate by focusing on the kinds of companies you invest in. And I think for the last 15 years or so, it's been a cycle of beta. It was all just about being invested and riding returns of indices, right? And you could have generated a 6.5% annualized returns just from a very simple 60-40 portfolio. But going forward, because the market has recovered already so quickly post-pandemic shock, we only project beta returns going forward of 4.3% annualized. So we got to work harder to generate the same returns as the last cycle. And that's where alpha comes in. You're starting to see a turn in hedge fund alpha. That could be a sign that really this is the dawn of alpha. There's a lot of valuation dispersion beneath the surface. There's a lot of value to add by focusing on stock picking going forward.
How much of the alpha, Gabriella, comes from China?
So China is a really important piece of this puzzle because you can add alpha in Chinese markets, and you can also improve the Sharpe ratio of a portfolio by adding Chinese onshore assets. So both stocks and bonds, we project it for China to have the highest returns over the next decade, double for Chinese A shares versus the U.S., and double for Chinese local currency government bonds versus U.S. Treasury. So there's a lot of improvement that can happen on returns by adding Chinese assets. And you also get a diversification kicker from those markets. They really beat to their own drum. You're seeing that in action this year.
Gabriela Santos, thank you so much, with JP Morgan Asset Management. John, while Gabriela's speaking here, we're talking about NATO and further headlines. To me, it's almost a stew, as frankly, Stoltenberg waits to hear from Moscow as well.
Well, there's a difference between optics and substance. So on the optics, Tom, things are better. On the substance, this is what we want to see. What we want to see is what Jens Stoltenberg hasn't seen. Not seen any signs of reduced military presence. So the optics have improved, Tom. We can all agree on that. That's for sure. We need to see some substance. When the Russian Foreign Minister Sergei Lavrov says that we're getting some kind of troop withdrawal, Tom, troops returning to bases partially from drills, etc., we want to see concrete signs of de-escalation, and for that, the NATO Secretary General would like to see a reduced military presence. He goes on to say he's not seen any signs of that yet.
And within the modern war, John, I think what's so important here, and all of our viewers and listeners know this is not Crimea, where it was, by mail or by post 3 weeks away, in 1856, things now are immediate. I mean,
Fast.
It's within seconds. And I don't understand whatever party you're talking about, how you do diplomacy given the new speed of diplomacy.
So, Tom, there's a couple of themes we've got to tie together as well. You've got the foreign policy effort, and then you've got the domestic issues, and they're hard to reconcile. It's a really, really complex time for this administration. On the foreign policy front, anything that happens could threaten higher oil prices, higher energy prices. At home, domestically, it's a big issue. So this is the story that came from the Washington Post this morning, Tom, that gets my attention, yours as well, and Lisa's too. Here's the lead paragraph. The White House and top Democratic lawmakers are beginning to weigh a new push for a federal gas tax holiday, Tom. That's the headline from the Washington Post.
Off the top of my head, it's 18 cents a gallon. If we pop $100 a barrel, I'm not sure what 18 cents a gallon does.
Tom Keene, Lisa Brabbett and Jonathan Ferro. Futures up by 1.6% on the S&P. On the NASDAQ 100 up by more than 2 percentage points. Yields up, crude down. WTI 92.20. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Some Russian troops are pulling back after drills that raise the prospect of an attack on Ukraine. That's according to the Russian Defense Ministry, which said the troops had completed their drills. The U.S. has warned of a Russian invasion. The Kremlin says it has no plans for an attack. Meanwhile, Germany's Chancellor Olaf Scholz is in Moscow to meet with Vladimir Putin. His first step was at the World War II Memorial. Demonstrators against vaccine mandates halted traffic at 2 major border crossings in Western Canada. Some vowed to stay even as Prime Minister Justin Trudeau used a law giving his government emergency powers to end blockades. The main border posts in Alberta and Manitoba have been closed. Commercial traffic to the U.S. was blocked by semi-trailers and farm equipment. The European Union's top diplomat says he strongly believes a nuclear agreement with Iran is, quote, in sight. Josep Borrell urged global powers to reach a compromise. Iran's foreign minister warned the U.S. and other Western powers to show their true intentions by removing sanctions on Iran's economy. And the Pentagon plans to toughen oversight of mergers amongst defense contractors and take other steps to bolster competition. Authorities say that substantial consolidation amongst suppliers poses a threat to national security. According to the Defense Department, 3 decades of M&A amongst contractors have left the Pentagon reliant on just a handful of companies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond. They're sinking big time.
You can't do better.
Bloomberg breaks the numbers first.
PepsiCo has given a sales outlook that beat estimates.
It's Peloton.
Disney and Uber.
Pfizer also out with earnings.
An expert analysis you won't get anywhere else.
This is fascinating.
What is going wrong for Meta that is going right for Twitter?
How much runway is left? Peloton really becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
If we impose some very heavy sanctions, as I believe we're planning to do on the Russians, with regards to international banking, but most importantly, with regards to Nord Stream 2 and their ability to distribute fuel, there's going to be some consequences to that.
And we can talk about the consequences. Leon Panetta there, the former U.S. Secretary of Defense from New York City with Tom Keene and Lisa Bramford. I'm Jonathan Ferro. Futures up 2% on the NASDAQ, on the S&P up by 1.6. Yield tied 2, up 4 on 10s to 2.03%. On crude, 92 at about 10 cents. We're negative 3.5%. And these stories come together, Tom. The energy effort and foreign diplomacy right now. The White House and top Democratic lawmakers are beginning to weigh a new push for a federal gas tax holiday, potentially pausing fees at the pump as part of a broader campaign to combat rising prices. That is the lead paragraph in a story from the Washington Post, Tom, in the last hour.
PPI here in an hour and 15 minutes. Again, the industrial measurement of inflation with some big numbers, even on surveys, 7, 8, 9%. Some of those sub-indices that we see on PPI, that will bear watching. I would note the VIX explodes, 27, 26. We now come under to a better market, 25.67 on the VIX, down 2.66. Big figures. That's a big move. Joe Matthew with us from Washington, and Washington awaking to what we hear from Stoltenberg. Stoltenberg of NATO still speaking, and of course silence in Moscow as Germany and Russia meets on this moment of international relations. At our hub in Brussels, Maria Tadeo. Maria, I've got about do like 3 things here in short time. Let me get to your reporting right now on what you see. What is the single thing you're trying to learn in your European afternoon?
Well, Tom, the big question in Europe is whether or not these troops are actually moving back. Every official that I've spoken with, particularly those in Eastern Europe that know Russia and Russian tactics very well, they say Russia does one thing, but then in the end, it doesn't materialize in them moving troops behind. So they really want to see the proof here. They really want to see the troops moving backwards sustainably. And for the time being, what they say is, we don't believe it. We need more troops and we need more proof.
Maria, I'm fascinated by the NATO visit to Romania a number of days ago. Stoltenberg of Norway speaking now. I believe he's going back to Norway to run a central bank in his spare time. But the fact is, NATO is acting off of 2014 in Crimea, and I guess NATO is acting off of what they see now. Can you suggest that NATO will entrench in Romania on the Black Sea as one of the actions out of this mess?
Look, and it's funny that you mentioned that because Stoltenberg is leaving for a central bank, but he did tell me a week ago that he's not leaving NATO at any time and that he will complete his term. So NATO will have a boss until October. Now, where NATO goes and where they station the troops at is an open question. We have seen them moving, not just in Romania, but also Poland and all of the Baltics, particularly at the request of the Baltic nations. But I think a lot of this will depend on what Russia does next. The other thing that I would point, Tom, just to answer your question on what is Russia intending on doing, a lot of Europeans do say that at this point, this is not about de-escalating. What Russia is trying to do is to change the narrative, to say, as you can see, there's been no invasion. All of this is hysterics, and this is war-thirsty America that put a date on an invasion that clearly did not manifest. So we're not the bad guys. It's the West that's creating tensions, and it's creating potentially tensions that could lead to a war. This is not Russia. So a lot of this is about the narrative, too.
Joe Matthew, meanwhile, as John was talking about, we did get that reporting in the Washington Post about a gas tax holiday in the U.S. How connected are the conflicts between Ukraine and Russia and the timing of this gas tax holiday?
Well, to be clear, actually, this is something that was proposed about a week ago by two senators considered at great risk of losing their seats. Mark Kelly from Arizona, Maggie Hassan from New Hampshire. The question here, and by the way, there's a direct connection as long as crude oil prices and gas prices hold near these highs. We're looking at a national average just south of $3.50 a gallon here. But there are big questions about, number one, what happens to the Federal Highway Trust Fund, already underfunded as more people start driving EVs? That doesn't help the situation. And also, Lisa, what do progressives say about that? Progressives are not going to love the idea of incentivizing the buying of more fossil fuels. So this may be a proposal for now. We'll see if it ever sees the light of day.
Let's put this into perspective. This gas tax hasn't changed since 1993. As Tom mentioned, it's 18.4 cents per gallon. It's stuck in 1993 times. It's not really going to materially make a difference and bring down the prices. So it really goes to this question, how much are gas prices kind of holding certain policymakers hostage when dealing with difficult geopolitical issues like what's going on with Russia and Ukraine?
Well, I guess, look, if we're talking about $100 a barrel crude, this is going to remain a conversation in Washington. Releasing the supplies from the SPR didn't do a heck of a lot to lower prices, or at least for an extended period of time either. This is more about perception. This is more about politics, saying, look, we did everything we could. Just like a sales tax holiday makes a lot of sense when you hear states doing that. It doesn't increase spending. It essentially front loads it. It pulls it forward, and we could see something like that as it would coincide with the summer driving season. Remember, we also have a reopening story that the White House is trying to embrace. They want people to get out on the roads, go on vacation this year, Lisa.
Joe, how bad are the polls right now from this White House?
Good question.
Well, they're right near the lows of the presidency. 40, low 40s, upper 30s, depending on the approval number that you're looking at. And Jonathan, that is exactly what's feeding this conversation about gas prices.
Joe Matthew, down in D.C. Joe, thank you, buddy, as always. To Maria Tadeo out of Brussels, we appreciate it. Whenever we work through headlines like this, there are the optics, what people are saying. There is the substance, what people do. So you've got to separate what people say from what they do. And sometimes, Tom, they don't align. Jens Stoltenberg speaking right now, the NATO Secretary General, saying signs from Moscow are cause for cautious optimism, optics. Then he goes on to say, we've not seen any signs of reduced military presence, substance. This market at the moment, Tom, bit of a relief rally on better optics. We need to work through that substance as the day progresses.
He's working through it, but he's working through it in concert with NATO. And it's a new NATO, John. And I'll be honest, I'm like everybody else. I'm reading in on this, trying to get smarter. But what's fascinating here is where are we heading to once this debate is over? And I really take at issue here what Angela Stent said, and also what Carl Weinberg's writing about at High Frequency Economics on China. We haven't mentioned China this morning. And I really wonder about a tripolar nature of U.S., Russia, and China after we're done with all this. I really wonder. That's a mystery to me.
You know, I know you don't listen to Lisa and I sometimes, but Lisa and I had several discussions on China, Tom.
It's okay.
It's all right. We're not offended.
We haven't talked about it in this context.
It's okay. You're not in the same room as us. It's okay.
Look.
Can we invite Tom in, Lisa?
You know what? I think so. We have a couch here.
Will you lift your ban on TK?
You can come in here. You can come in here, but on one circumstance.
Oh, yeah, let's hear it.
You got to bring the Bramo cam. If you don't bring the Bramo cam, you can't come in here.
Bramo cam travels with me.
Cam and all the Bramo energy. Bramo and TK. I'm Jonathan Ferro. Futures at 1.6 on the S&P from New York. Heard on radio, seen on TV for our audience worldwide. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
So the optics improve. We'll take it. That's better than nothing. We need to see the substance now. If we're talking about a troop withdrawal, can we see that on the ground? Jens Stoltenberg, the NATO Secretary General, says he hasn't seen that yet. We wait. This market waits for no one. Futures up by 1.6% on the S&P, on the Nasdaq up by more than 2 percentage points. You take equities higher, you unlock high yields too. How long before we start seeing high yields start to take equities lower again? That's what Bramo's very, very focused on.
Yeah.
Not me. Bramo's very, very focused on the risk that equities get lower again. Switch up the board and get to the bond market. You know, there's a whole promo on you right now.
How gloomy I am.
It is fantastic.
Oh, I'm glad. Thanks.
You should see that, TK. Treasury yields up a couple of basis points, just short of 160.
All I had was soccer on the couch.
159.38. You're in trouble, aren't you? Yeah. Looking at bonds, yields the highest since late 2018 at about 31 basis points positive in Germany. And to finish on this, Tom, just to wrap up, to capture the tone of the market this morning, we look like this. Equities up, yields up, crude lower by 3.5% to 92.11 on WTI.
We'll visit Swissy here briefly in a moment, but yeah, we're watching all this. I got to mention John, gold down $20, $18.50 the ounce.
And as we push some cautious optimism through the FX market too, the Russian ruble showing a little bit of strength as well. That's the cross-asset price action. Let's get you some single names, some movers, and say good morning to Kaylee Lines. Hello, Kaylee Lines.
Good morning, Jonathan Farrow. Yes, you talked about how oil is moving lower today, and with the underlying commodity moving lower, a lot of oil and energy stocks are under pressure in pre-market trading as well. The likes of Continental Resources down 4.5%. You got Marathon Oil down by about 3% as well. One group of stocks moving to the upside, though, is basically anything tied to cryptocurrencies, because you have big gains for Bitcoin with that better risk sentiment this morning. As a result, the likes of Coinbase are up a little more than 4%. There are some earnings stories out there as well. Arista Networks, one that reported after the bell yesterday, a really bullish outlook, topping analysts quick to raise their price targets as a result. That stock is up 10% before the bell. You also have Rivian moving higher for a second day. This is a 13F story. Soros Fund Management buying into the electric truck maker, other funds raising their stakes in it as well. So after a 6.5% gain yesterday, it's higher by 5.5% this morning. And then finally, Yandex. This is a Russian company, a Russian e-commerce internet company listed here in the U.S. It is down 25% year to date, really under pressure in recent weeks, along with Russian equities more broadly, due to some of those geopolitical tensions regarding Ukraine. But with the better headlines coming out this morning, some relief coming into that stock, which is higher by more than 10% before the bell, Tom.
Thank you, Kaylee Lines. I learn every time when you talk to me about Yandex. Thank you. Kaylee Lines there, and of course, see her early in the morning here.
What is it?
Getting our day started. It's like internet-y.
Sounds like something else.
No, what is it?
Do you wear Yandex when you go out?
Is that what it is?
Yeah,
I seriously don't know.
I hear Yandex when I do my 10,000.
I'm not going to pretend that I know.
It's a search engine and web portal.
I've seen some stock pickers in the past pretend they know about the stock they're talking about, but they don't. I know Katie knows. You're saying it's the Russian Google. Is that what it is?
She's coming back on and nodding.
Katie Lyons is not. Can we get the mic off? Is the mic off for Katie? Katie, can you tell us what it is?
I walked off set too early. Yeah, it's like a Google. It's a search engine, but there's also a ride-hailing component to it. So in part, it's also Uber. Basically just an internet giant, a very big company in Russia that, of course, is trading here. So there's some knowledge for you, Tom Keene. Sorry for leaving too early there.
Thank you, Kaylee. Don't go away. You can ask. Kaylee can ask a question to Mark McCormick here. Stay right there. Global head of foreign exchange strategy, TD Securities in Canada, Mark McCormick, joins us this morning. Mark, I look at the continuum of your note, and it seems like it's a McCormick sea change here off of your wonderful call on dollar resiliency. Are you ready to make, as Bullard would say, a regime change call in the land of McCormick?
Yeah, I think we're getting closer to the top in the dollar in broad terms. But I do think what's kind of interesting is there's still some more dollar resiliency ahead. So I know there's like kind of a big shift in the market in terms of how much expectations are going on the euro, but I still think that there's room here to trade euro from the downside. So we're kind of thinking a bit about a V-shaped bounce in the euro. So we see another move maybe towards 112. We bottom out there around Fed liftoff time. And then we're basically off to the races in the back half of the year looking for kind of a revisit around 120 toward the end of 2022.
You do a great job on the currency wars. And the currency wars are usually ascribed to a race to the bottom of weaker and weaker currencies to boost exports. But you take it a different way. What does next year's currency wars look like?
So we're basically living in it now, which is a race to the top, where essentially policymakers prefer currency strength because it's a way to limit inflationary pressures. I think, as you mentioned, you noted Swiss franc, and that's a clear story here that the central bank, the SNB, has allowed a little bit more currency strength than more people would have anticipated. And Swissie's been much stronger than more people would have expected in this environment of higher global yields, largely because they're allowing the currency to do some of the work for them. So stronger currency, lower inflation. And now every central bank around the world, all policymakers actually are looking for stronger currencies. They're not telling you that, but you can see it based on what their actions and what they're doing. And the preference now is for a stronger currency. And that's helping to work off some of the inflationary pressures we have.
Mark, in the past decade, we've really talked about rate hikes or rate cuts really dictating the moves that we've seen in currency markets, and that's shifted over the past year to a growth outlook. Over the next 12 months, do you think it's going to primarily be driven by growth and not necessarily rate moves? And I point to China, for example, where you see the yuan actually strengthening despite the increased support and the potential rate cuts coming up.
Yeah, it's an important question because what I think is most important, and our work shows it, is currencies are multidimensional. So I know we're kind of focused on central banks and geopolitics right now, but if you look at what factors have been making money the last couple of years, it's value, it's growth, and it's also terms of trade. So I do think growth is also, it shows in our back test, it's the most important factor through periods of time, and I think it's one of the things that will matter most, especially on COVID reopenings. You know, if we're moving in a world where we have synchronized policies that are kind of allowing everyone to reopen, growth is going to matter, and we're going to see growth divergence. But I think when we think about central banks, growth, commodity, terms of trade, and value, and I think one of the most important things we have to think about are equities. But on the rate side, where we're going now, it's really about terminal rate pricing. It's kind of like the first ones in are now kind of the countries that are at a big disadvantage. If you look at the Canadian dollar, the BOC started to move last year, and it's kind of one of the least exciting currencies now in the central bank trade. But there's a moment in time here for probably the next 3 to 6 months when we think about terminal rates. And figuring out who is the highest terminal rate will help the currency. But if we step back from that, growth, terms of trade and commodity exposure, equity momentum, and value are the critical drivers for currencies moving through this year and probably into next year.
So if we connect this, Mark, with this idea of the currency wars that you're talking about, where nations want to see stronger currencies to fight off inflation, how does this factor into the Fed's calculus? Does this actually encourage them to be a little bit more hesitant to raise rates or be more aggressive in order to allow, ironically, the dollar to strengthen more because it will increase growth prospects?
Well, I think part of it is they want to essentially, I wouldn't use the word shock the markets, but essentially what they want to do is kind of get ahead of expectations. And I think what U.S. is worried more so than any other country in the world is that rent and wage pressures are starting to rise faster than other countries. If you still kind of strip out your diffusion indicators for inflation, in Europe, there's still definitely a focus on energy, and that's a big driver of inflation. But U.S. is starting to see expectations around longer-term projections of inflation starting to rise, potentially at uncomfortable levels. So I think there's a component here that what the Fed's trying to do is really they've got a little bit too far behind the curve. They're trying to get aggressively in front of the curve, but they're also wary that growth is also slowing. So they have a moment in time here where they can hike, and they can hike aggressively because they actually might be hiking into what is a very a slowdown in the economy next year. So I think they're definitely just trying to get ahead of things and anchor longer-term inflation expectations.
Mark, you got to revisit Swiss franc here. Euro Swissy, a 104.875. A 105 print would be weaker Swiss franc. We're not there yet. You've been doing this for years, Mark, watching Swiss National Bank. We talk about balance sheet dynamics in America. They own a truckload of Apple, Starbucks, and other selected equity shares. What is their vulnerability as they make a potload of money in Apple shares? I just don't understand that.
Well, it's quite interesting, too, because it goes around with the global growth momentum stories. So if you think about kind of a big driver that's moving markets around, what's underperforming? U.S. equities are underperforming because they are highly leveraged to growth. Growth is highly levered to real rates. And so not only are U.S. real rates rising now, but global real rates are rising. So the concern from that trade is that they're going to be owning underperforming assets. And I think what's very interesting is that when we think about the growth to value rotation, which I think is going to occur in equities, but the sequencing is too quick to trade it now because ultimately we need higher real rates, which means we need Fed terminal pricing to go up. But the concern for that moment for Swiss franc is euro offers a tremendous amount more value than the Swiss franc. And then if you kind of, again, think about the performance of the balance sheet or having exposure to those equity markets, those are going to be the equity markets that are underperforming probably over the next 6 months, over the next 12 months. So this is where Euro Swiss is going to be very interesting, is that Swissy was allowed to kind of, again, control inflation a little bit more than anticipated. You didn't need that from the euro. You also got, again, the balance sheets kind of leveraged these global growth stocks or that are leveraged to real rates. But the value in the equity store is really in the euro, not in Swiss franc as we move forward.
And Mark, I'm going to ask you a question, and if you don't want to answer it, you can just pretend you can't hear me. What on earth is going on in Canada right now?
Yes, so in March, the central bank is going to hike rates, and there's inflationary
That's
pressures.
exactly where I was going, Mark. Go away. Mark, thank you. Mark McCormick of TD Securities. Mark, thank you very much. We spoke before this interview started. Mark knew what I meant by that. Tom, I used to spend a lot of time over in Switzerland catching up with the Swiss National Bank. They never like talking about this. If you go through the holdings of Apple, just HDS go on the Bloomberg and break it down very quickly. Number 25, the Swiss National Bank. They've got all these FX reserves, Tom. The majority of it's in bonds, but about a quarter of it, historically, in the recent history anyway, has been in equities. It's just amazing to see, Tom.
It's a profit-making machine. They pay a dividend, a distribution to the Swiss government, and John, I know you've got 3 or 4 accounts there. You probably get a distribution, too.
What, over in Switzerland?
I just wish they'd pay a distribution to Brasserie Lips. A lunch wasn't $40 for Redo, keeper of the Amex.
We'll get President Jordan to pay next time, TK, and you and I will take a miss. Yields in through the last couple of days, higher now by 4 basis points, 2.02%. The equity market up by 1.5. From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Rishka Gupta. Russia has announced that some of those troops involved in drills have started returning to their bases. The military exercises had raised U.S. and European concerns about a possible attack on Ukraine. The Kremlin has denied it's planning any attack. The White House reportedly is considering a federal gasoline tax holiday. According to the Washington Post, top Democratic lawmakers are also weighing the move. Pausing fees at the pump would be part of a broader campaign to fight rising fuel prices. Hong Kong says it's overwhelmed by the growing Omicron outbreak, but there are no plans for a citywide lockdown to bring that number of cases back in to 0. Hong Kong is searching for more hotels to use as isolation facilities. And shares of Virgin Galactic are jumping today. The company says that ticket sales for journeys into space will start tomorrow. The price, $450,000. Commercial service is expected to begin later this year. Virgin Galactic was, of course, launched by billionaire Richard Branson. And Elon Musk has reported that he gave about $5.7 billion of Tesla shares to charity back in November. The donation was one of the biggest ever. The name of the charity wasn't in the filing. A large charitable donation would help reduce what Musk claimed would be the biggest tax bill in U.S. history. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
in terms of the commodity price outlook, we do, as we said this morning, expect that we've got another billion-ton plus year ahead of us for Chinese steel production. But at the end of the day, iron ore price will be determined by supply and demand. You know, given the strong outlook that we see for the demand side of the equation, we do think that that's going to provide a measure of support to pricing.
Mike Henry there, the BHP Group CEO. From New York with Lisa Abramowitz and Tom Keene, I'm Jonathan Ferro. There's a lift in this equity market, up 2% on the Nasdaq, up 1.5 on the S&P. Yields are higher again today by 3 or 4 basis points on 10s, back through 2%, pulled back in Friday's session very late on with some real jitters around the story in Ukraine. Now there's a bounce, another bounce in the US, another bounce in Germany too. Yields higher, crude lower by 3.3%, TK 92.30 on WTI.
The bounce across 24 hours, but I would say in the last 20 minutes for pros glued to this across equities, bonds, currencies, commodities, there's a churn, I would call it, right now. And this, of course, devolves off of all headlines. John, I'm looking at Russia right now. And, well, you know, Prime Minister Johnson's out there. They're literally coming out in real time, folks. We're reacting to this.
I'll pick them up, Tom, if you like.
Ukraine recognizing rebel republics. Russia violates Minsk Pact. Well, that gets you going on the Tuesday morning.
I know, and then the reaction from Boris Johnson, Tom, just some of the headlines we've come from him reacting to the last couple of days. Looking closer at ownership of Russian companies, the UK very much the epicenter of some of that discussion, Tom. We think Russia is prepared to move at any time. Yeah. We've heard that from the US administration over the last few weeks too. Seeing Russian openness to conversations. And Tom, that final headline seems to be what's driving things at the moment. Just a shift in the optics, the dialogue, just the style, the approach of things seems to be improving. What I think we'd all like to see is some real substance going forward.
And we await on Germany and Russia meeting in Moscow. Kriti Gupta now on oil. Kriti?
Yeah, Tom, let's just talk about the volatility that you're seeing in the crude markets. I mean, it's kind of presumptuous to think that a lot of what's happening in crude is just related to Russia. We've been talking about this kind of tug of war, essentially, between, do you start to see that geopolitical premium priced into Brent crude prices, or is this simply underlying demand pushing prices higher and higher to $100 a barrel? Let me say it's actually a combination of both, which brings me to my chart of the day. Crude volatility going back for about a year, you do start to see a steady incline from about July to November. This massive jump in volatility in November when you did get that 20% bear market kind of triggered alongside that Black Friday sell-off in November. But since the start of the year, that incline has become much, much steeper. And yes, part of that is those geopolitical tensions. Part of it is also potential supply coming from the Iran nuclear deal. Tom, this is not something that gets enough attention. The idea that in exchange for potentially Iran pulling back some of its nuclear advancements, some of its nuclear abilities, it could actually bring about some more supply to the market. And right now, the holdup seems to be what that supply support, what that supply kind of contribution really looks like in line with Russia, with Saudi Arabia, and with some of the other oil members. And of course, it's that tug of war that you're seeing in addition to the risk sentiment and of course the inflationary dynamics they're seeing in the underlying economy that's really making the crude markets less and less of a kind of indicator or a economic proxy than it traditionally would be.
Kriti, thank you so much. Now we move on oil. John, we've got to do that Ukraine headline just coming out here. I don't know if you have that in front of you here as we juggle, but Ukraine really making some important statements here on, it sounds like Star Wars, but it's not. To be serious about it, these are very, very important headlines. Ukraine recognition of rebel republics has no legal merit, etc. We'll have that for you literally coming out moment by moment. Ellen Waldnow, Senior Fellow at the Atlantic Council. Ellen, you have a sentence in your important research note that stopped me. The United States imports 138,000 barrels from Russia. The United States takes in Russia oil. Is that true?
Absolutely. In fact, overall, Russian crude and product shipments to the United States accounted for 11% of total U.S. imports between January and October of 2021. That's according to the EIA. We have seen imports decrease a little bit in 2022, but the year is young. And so, yes, we are an importer of Russian oil products. We also import Russian LNG at times. There was very highly publicized news of cargoes of Russian LNG that came into New England during cold snaps in previous years because of bottlenecks getting American natural gas to the region.
So, Ellen, you talk about how the geopolitical tensions have dramatically affected the price, the fair value of oil, and that without these, you could see prices going back down to the $80 level more significantly. With more tensions, you could see it surging above $100 a barrel. Can you give us a sense of your calculus here?
Yeah, exactly. And I think that the chart that Kriti just showed really highlights this and the incredible volatility that we're seeing as a result. And we've seen a lot of volatility because of these geopolitical risks. We're seeing oil climbing on news from Russia. We've seen it decline slightly on news coming out of Iran. That's also a very important geopolitical risk factor right now, although I do think that perhaps the likelihood of a deal and more oil coming on the market from Iran was a bit oversold maybe by the Iran analysts, though there has been some talk that perhaps if we do get an Iran deal, say next month, that is able to put more oil on the market, the sanctions are relaxed, Iran puts more oil on the market, I think we'll see a big jump in oil at the beginning because Iran does have a lot in its floating storage that it can put directly on the market. And then I do think will be a slightly slower ramp up than perhaps Iran thinks that it is able to do. But it could bring oil prices down by maybe $7 a barrel if we see that. But then at the same time, we've got these geopolitical tensions that are ratcheting prices up. Part of that is also the fact that no one really knows what these sanctions could be. No one knows if Russia is actually going to attack or not, despite the headlines. And so that uncertainty is also raising prices.
Ellen, we have to leave it there. It is wonderful to catch up with you. Thank you. Ellen Wald of the Atlantic Council. Tom, I want to return to those headlines you read from Ukraine. Recognition of rebel republics has no legal impact. Tom, these are important headlines from Ukraine, recognizing rebel republics, that Russia might violate the Minsk Pact. What's happened here, Tom, in the last 24 hours? The State Duma, the Russian Assembly, has essentially pushed for the Russian president to recognize some of these separatist movements in these various regions. I believe the two regions, Tom, we're talking about at the moment, one is Luhansk and the other is Donetsk. And the ultimate push from the Russian Assembly is to get the president to recognize them as breakaway republics or something to that effect, Tom. We'll see what happens on that front, but that's where the tension is at the moment for the Ukrainians.
There's confusion over the Minsk Pact. There's actually a number of protocols and pacts involved here, John, and their complexity gets down to the territory and geography, and maybe that's what we've not heard this morning among the diplomats, is it is about land at the end of the day.
Very much so. Coming up much more on this equity market, up 1.6% on the S&P, and the NASDAQ up by 2.1%. From New York City, with Tom Keene, Lisa Abramowitz and Jonathan Ferro from New York, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Look, the economy is still strong. We look at the leading indicators. They're still positive.
Corporations are still really in good shape.
Consumer free cash flow is still quite strong.
I think inflation will also be fading as the year goes on.
The fundamental backdrop here, to me, still seems pretty good.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, our studios in New York. We welcome you on radio and television. We continue with Maria Tadeo in Brussels to monitor what we see in Moscow, what we hear from Ukraine in the recent moments. And John, all of it folds back to what the Bloomberg terminal says. It's a better market.
The tape improves, sentiment improves, the optics improve around Ukraine and Russia, Tom. Now we need to see the substance. In the words of the NATO Secretary General, Jens Stoltenberg, Tom, he hasn't seen the facts on the ground yet. Let's hope they back it up.
There's a set of headlines. We're watching three sets of headlines. The acclaimed Bloomberg headlines here. Russia, where there's really been silence in meetings. Ukraine moments ago. And then John, NATO stepping in with a lengthy Stoltenberg presser over the last, I'm going to say, hour and a half or so. What matters to you, John, of those three sets of headlines?
Well, let's start with NATO. So what we've heard from the Foreign Minister, Sergei Lavrov, in Russia, Tom, is that there's some troops are partially withdrawing and going back to their bases after what he calls drills. Okay, point one. Point two, the NATO Secretary General Jens Stoltenberg would actually like to see that withdrawal on the ground, and he hasn't seen that yet. He wants to see evidence of that, Tom, and I think that's what everyone wants to see. The substance back up the better optics. For an equity market, it's not going to hang around, is it? The probability shift in the last 24 hours in the favor of something better happening here. Equities are up, yields are up, crude's lower.
Boris Johnson weighs in now. John, this in the last number of minutes. Sign of diplomatic opening to resolve Ukraine crisis. John, should we expect Prime Minister Johnson seriously to travel to Moscow?
I don't know, Tom. I can't speak for the Prime Minister, but as a member of NATO, given what everyone else has done, Tom, very recently, Chancellor Scholz has been over, President Macron has been over. I'm sure he might go over too.
He gets frequent flyer miles with that too.
Is
Lisa,
that what he gets?
He gets it. Lisa, let's look at the domestic front today. And in 28 minutes, we get PPI. Is it CPI? No. But all of a sudden, it's important.
It is important. And how much does that shift the dialogue away from the geopolitical conflict and, frankly, the mess of headlines? And I'm going to call it a mess. I love how you go to John Ferry. You say you're British, so you must be a speaker for Boris Johnson. But how much, looking forward, are we really going to be focusing the rest of the day on inflation? And will all of a sudden that lift that we're seeing in yields lead to a more negative feedback loop into equities, or are we going to see a continued resilience despite those particular fears?
Well, we're going to have to see. And Lisa, to me, what's important here is the new definitions of the, say, year end, just to take a point, terminal rate on inflation. And that's really open to debate right now.
Nobody knows. And you have people saying that we're about to get hyperinflation. I'm sorry to use the H word, John. Oof. People saying, I know, all of a sudden that's going to be the topic of heat for the rest of the hour. You have some people who are saying we've got more entrenched inflationary pressures. How about that? And then you've got other people who say it's still transitory. It's going to feed off into the same kind of regime that we were facing pre-pandemic. And honestly, I think that it'll be really interesting, the meeting notes, the notes from the meeting, from the Fed meeting that we get tomorrow, how much they really focus on the Fed balance sheet as a tool of some of their policy.
We got to go to this, John. It's too important to let up here. I mean, Abramowitz, folks, is hypersensitive. I mean,
on the H word.
There's no other way to put this.
I'm getting ahead of the heat.
What's important here on the hyper is not so much Zimbabwean inflation, but, John, just the certitude that we're coming down.
It's a collapse. It's a collapse in the confidence of the underlying currency. We haven't seen that. Now, if you want evidence of what that looks like, it's when people go around with massive bags full of cash trying to pay for things. That's not what we have. I know a lot of people would like to use the H word. They might be long certain securities that benefit them. If we start using the H word, I'm thinking of a certain tech CEO. That's not what we have. Do we have high inflation? Absolutely. Does it deserve the H word? I would say look to Weimar, look to Zimbabwe, look to Venezuela. Don't use the H word.
All right. Tom, this is why I'm hypersensitive. Exactly this. Because I knew this was coming, and I knew I used it.
Well, no, I think it's an important moment just to kind of, drain the drama from the moment. Just
drain the drama.
Okay.
It's ridiculous to use the H word. It just is. And anyone who studies economics, is a student of economic history, Tom, they know to use the H word with inflation at 7.5%, come on. That's ridiculous. High inflation, yes. A Federal Reserve that is completely behind the curve, absolutely. Divorced from the facts on the ground, I'm on board. Hyperinflation, let's get real.
Let's get on here to data and then to Scott Clemens. I'm going to look, John, at improving tape. The VIX, 2.44 points, 25.89 is a better equity market.
It's a better tape, Tom. Yields are up too, up 3 or 4 basis points on 10s to 2.02%. Crude pulls back by 3% to 92.45. Here's a statement, Tom, from the Ukrainians, and I think we need to quote the Ukrainians just a little bit more. This came from the Ministry of Foreign Affairs of Ukraine. It says the following: on Russian statements regarding withdrawal of some forces from the Ukrainian border, we in Ukraine have a rule. We don't believe what we hear, we believe what we see. If a real withdrawal follows these statements, we will believe in the beginning of a real de-escalation. They're the comments from Ukraine, Tom, just moments ago.
And the headlines coming out as well on Minsk and the rest of it, and we'll just have to see here. Again, waiting in Moscow for German and Russian meetings. And right now we await on our chief investment strategist at Brown Brothers Harriman, Scott Clemens, joins us, always informative. Scott, what has changed in your view, staggering from 12/31/21? If you had to rewrite the outlook today, how would it be different? And what would be the nuances of change?
Tom, obviously the big push and pull at present, and I think over the course of this year, is going to be this battle between inflation and the Fed response to it. There's a subtle nuance here, though, that I think is important. And any student of long-term financial history will recognize the important thing is not that the Fed is raising interest rates, but why the Fed is raising interest rates. If there is a benign narrative behind that associated with robust economic growth, improving labor markets, healthy corporate earnings, the market's fine with that. If, on the other hand, to the point Jonathan just raised, if the Fed is believed to be behind the curve on inflation and scrambling to catch up, That's a pretty disruptive narrative. That's kind of fractal. That's not only the debate over the course of the year. I think that's often the debate within single market trading sessions where you see this big intraday market volatility. I think that's going to linger for the duration of the year.
Scott, when you start to see real yields rise and growth decelerate, which is what people anticipate towards the end of the year, typically what does that market look like? And are you seeing that evolve in real time at the moment?
I think we are already seeing that evolve in real time, even though we're talking about, will the Fed begin raising interest rates in March? Will it be 25 basis points, 50 basis points? As you observe, market yields are already rising, mortgage rates are rising. So there are already tighter monetary conditions. I'm not calling them tight. If anything, by the time we get to the end of the year, I think we could be looking at a run rate economic path in terms of GDP, in terms of inflation, in terms of interest rates, that looks suspiciously like the pre-pandemic quarter or two. I think that's a market that returns back to a greater focus on valuation and a greater focus on quality, if we're talking about equities, and less of a focus on the cyclicality that's dominated the market over the last year. The so-called reopening trade has already begun to wane.
What's the role of cash then amid this slew of uncertainty?
Lisa, I think cash has an option value in a period of market volatility that's rather appealing. So historically, for most of the past 10 years, cash has been practically a zero return investment. That'll change a little bit over the course of this year. But in a more volatile market environment, the option value of cash increases. And therefore, the appeal of it increases. It gives an investor the...
Hello, traders again. I'm going to place an order to sell short euro. The price I'm looking to sell, 1.1345. Okay, you got the strategy. Please place your order to sell short euro, and where is 1.1345? Just right here. Okay, as soon as we will get filled, I will speak you and I'll let you know what we're going to do with this position. Okay, we're still waiting until the position will get filled. So please place your order and wait. I'll speak to you later, guys.
Headed into the kind of year that we expect to unfold over the course of 2022.
Scott Clements, thank you, sir, as always, of Brown Brothers Harriman on this equity market. Tom, just breaking things down, if things improve again on the NASDAQ, up 2%, on the S&P at 1.5.
Yeah, definitely a lift to the market. And look at the micro data, I'd say, John, over the last 2 hours, it's sustained. And we cannot forget, John, within all of this discussion of international relations and diplomacy, there's a modest inflation report here in exactly 20 minutes. And that may move the market ever more so.
And then it's on to the Fed minutes tomorrow, Tom. And a ton of Fed speak just going through the diary. Bullard, Mester, Evans, Williams to close out the week. The back half of this week, Lisa, it really picks up.
I don't know, what is going to drive market action? It's such a skittish market right now. We've been talking about Ukraine. Are we going to be even talking about it after 8:30 a.m.? Are we going to be talking suddenly about the Fed moving so quickly and the flattening yield curve? I mean, pick your data point, pick your narrative, and there's your day. It's very... I don't know. That's why cash as an optionality is making sense to that many more people.
I've heard it from so many different people now. Heard it from Oksana Aronoff of JP Morgan Asset Management yesterday. Bob Michael before. What have we got? Mark Kiesel over at PIMCO, same thing. Rick Reeder at BlackRock. Just the option of holding cash, Tom, through what could be a volatile year.
How much is critical off perspectives of an open-end, a regular mutual fund, an open-end investment company, is 3 or 4% cash. Well, if you go out to 7 or 8, that's double cash.
5% cash, Tom, was the level in the fund manager survey. The fund manager survey, just going through it right now, bringing up the quote. 5.3% cash levels jumped to. That was a jump. Just to be clear, getting back to 5.3% and maybe heading in that direction to add a little bit more. Futures are up 1.5%. Yields are up by 4 basis points and crude is lower by almost 3% to 92.69. The optics improve. I stress the optics improve around Ukraine. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishka Gupta. Some Russian troops are pulling back after drills that raise the prospect of an attack on Ukraine. That's according to the Russian Defense Ministry, which said the troops had completed their drills. The U.S. has warned of a Russian invasion, but the Kremlin says it has no plans for an attack. Meanwhile, Germany's Chancellor Olaf Scholz is in Moscow to meet with Vladimir Putin. His first stop was at the World War II Memorial. Demonstrators against vaccine mandates halted traffic at 2 major border crossings in Western Canada. Some vowed to stay even as Prime Minister Justin Trudeau used a law giving his government emergency powers to end blockades. The main border posts in Alberta and Manitoba have been closed. Commercial traffic to the U.S. was blocked by semi-trailers and farm equipment. The White House reportedly is considering a federal gasoline tax holiday. According to the Washington Post, top Democratic lawmakers are also weighing the move. Pausing fees at the pump would be part of a broader campaign to fight those rising fuel prices. And shares of Virgin Galactic are jumping today. The company says ticket sales for journeys into space will start tomorrow. The price, $450,000. Commercial service is expected to begin later this year. Virgin Galactic was launched by billionaire Richard Branson. And MoneyGram has agreed to be acquired by Madison Dearborn Partners in an all-cash transaction valued at about $1.8 billion. That represents an approximately 50% premium to MoneyGram's closing price on December the 14th. That was the last trading day before media speculation about a deal began. Global news 24 hours a day.
Okay, guys, position opened on Euro, as you can see just right here. Short position at 113.45. Stay with me if you manage to open position, short position on Euro. I will guide you through. As soon as it will move lower, we'll place stop. We will not place stop below our position. I mean, we will not lose money on this trade. So as soon as it will move lower several pips, we'll place stop, and then we will follow the chart. We will see how far it will lead us. Okay, guys? Stay safe, and I'll speak to you later.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
The fact that no one really knows what these sanctions could be, no one knows if Russia is actually going to attack or not, despite the headlines, and so that uncertainty is also raising prices.
What a rally it's been in the crude market year to date for 2022. Ellen Wald there, the senior fellow at the Atlantic Council, with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures are higher, up 1.5% on the S&P, coming back just a little bit from session highs. On the Nasdaq 100, up almost 2 full percentage points. Yields are up 2, Tom, up 4 basis points to 2.03%, and crude backing away, backing down, lower negative, heading south, down by 2.9% on WTI to 92.75.
As we spoke to Angela Stent the other day on Putin's World, now a definitive conversation with Peter Trubowitz, professor of international relations at LSE, of course, iconic at University of Texas, in its important group effort, The Retreat of the West, which was timely to say the least over the past 24 months. I want to take it the other way, Professor Trubowitz, and say the advance of the East. If I look at Putin, and I see him, and this is a phrase from you, of the power and partisanship that we can see. How much power does Mr. Putin hold, and what partisanship can he look for as the East advances?
I'm good to be with you. So Putin holds a lot of cards, and he's displaying them. He's been using them and playing them. They're mostly hard power cards. Deploying troops, running exercises, moving his ships through the Dardanelles Straits and so forth. He doesn't have much soft power, and there's a lot of opposition in Europe to what he's doing. And the closer you get to Russia, the more opposition there is, if you're talking about in the Baltic states and obviously in Ukraine. I think he's gotten himself to a point now where he's laid down a lot of demands. And I think we're now kind of at crunch time where we're going to see whether or not he gets traction on his main demand, which is that the Ukraine not join NATO or not. I think that's where the game is right now.
Right.
We're in the 11th hour or whatever, metaphor you want to use. There's some hopeful signs, but this could easily go south.
What will you listen for from the new leader of Germany in the coming hours?
I think this is a very interesting trip that he's making because first, as you know, he stopped yesterday in Kiev and had a conversation there with Zelensky, the Ukrainian leader, before moving on to Putin. I think the question here is, what I'm looking for is whether or not Zelensky's comment yesterday about NATO being, his country's desire to be part of NATO being more a dream, in quotes, than a realistic goal, is somehow the basis for private negotiations, stuff that we're just not privy to right now, and arrangements that are going on, and whether or not the announcement this morning that Russia was pulling back some of its troops is in response to that. Unclear, reading tea leaves, but that is where I think the discussion and the negotiation is right now.
Peter, usually it is reading tea leaves, and yet we've gotten an unprecedented amount of information from the U.S. administration in real time about what they believe to be happening. How do you read that?
I think there are multiple audiences there, Lisa. It's a great question. One of them is to underscore to the Ukrainians how serious the situation is. The second is really, or maybe it should be the first, is to deter Putin. They're getting information that's coming from close to Putin, it would appear, and to really raise, in a sense, his understanding or the stakes that are involved, and that the U.S. is in a sense trying to get out in front on the narrative or the information game. But I think the third thing is to try to demonstrate to the American public that they're on game inside the United States. The Biden administration is managing this much more effectively than, let's say, it managed the Afghan pullout.
Peter Trubowitz, to go back to George Kennan and the founding of all this, is this the new containment? Are we searching for a new Western strategy to contain the leader of Russia?
Well, I think the West is searching for a strategy. I don't think that this is, or primary Western states like the US and Germany and UK and others, I don't think this is what they had imagined. But ironically, what is going on here thus far is that Putin's efforts to change the European security structure have actually, I think, given NATO, given the Western alliance, kind of new purpose, something it really hasn't had, as your question alludes to, since the Soviet Union collapsed 30 years ago. It's led to the deployment of more US and other troops in Eastern Europe, as well as the delivery of thousands of anti-tank missiles and other weapons to the Ukraine. Putin has managed to get everybody's attention in the West, but the results are not all favorable to him. Whether or not this is what takes form as kind of a Western collective strategy is unclear. Remember, what Joe Biden would like to be focusing on is China and East Asia. So every day that he is and his team is investing time in Europe is a day really that they're not getting the message out as much with respect to East Asia and China. And I say that despite the fact that the Secretary of State is in East Asia right now, but that story is buried below the fold.
Professor, what a great point. This truly was a clinic, and I'd love for you to come back soon so we could extend that conversation to the second chapter of this, which I believe is a discussion about China. Peter, thank you. Peter Trubowitz there of the London School of Economics. Did anyone even know where the Secretary of State was?
Yeah.
Lisa, before he said that?
Well, we talked about it yesterday. He went to Australia, right? Tony Blinken. He was going to be in Australia and then speaking with those East Asian nations to try to shore up support versus China. But we're not talking about that.
Absolutely not. It's not even buried on the back page, Tom. It's not in the newspaper.
Well, life goes on. That's the strategy, is to show that there is, things away from what we're witnessing on the continent of Europe. And frankly, I think you're going to see that throughout all the Biden government. I think what Professor Trubowitz said there about the communication model of the Biden administration here is something we've underplayed. They've been incredibly focused on giving out information.
We're going to be focused on PPI at the bottom of the hour, 8:30, 5 minutes away. PPI just around the corner, 8:30 Eastern Time, 5 minutes away, and we're looking for a hot number again, but a deceleration, we hope. A deceleration, we hope, I stress. Futures up 1.4 on the S&P. Yields higher, crude lower, down by 2.9, 92.73 on WTI. Mike McKee is seated and ready to go to break down this data for you. We'll get to him in just a moment. From New York City, this is Bloomberg.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Seconds away from some economic data in America with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market has a lift. Yields are higher. Crude is lower. We're down to 92.75 on WTI. And we've got some PPI data for you. And Mike McKee, it is hot, hot, hot.
Yeah, this is not going to be good news for the Fed. The PPI for final demand on a month-over-month basis comes in up 1%. That's after a 0.3 rise last month, and the forecast was for 0.5%, so double the rate of inflation in the month of January. Leave out food and energy, and we were up 0.8. The forecast was for 0.5% there as well. So it leaves the final demand on a year-over-year basis at 9.7%. We thought because of base effects we'd be dropping to 9.1%, but no drop there, and 6.9% the core rate on a year-over-year basis remains, well, actually, the core is 8.3% year-over-year. The forecast was for it to drop to 7.9. If you add trade services, which is wholesalers and people like that, 6.9%. So a significant increase in producer price, or as we like to call it, factory gate inflation on the month. We can look at what it was mostly made up of. I'll take a look for that while you do the markets. Let me just also point out Empire Manufacturing comes in at 3.1. That was expected to jump to 12.1, better than the negative 0.7. We did have a big increase in Empire hiring, which is good, but new orders didn't rise all that much.
Not really trading off the back of this in a big way, Mike. Looking at futures, still elevated, up by 1.26% on the S&P. On the Nasdaq 100, up by 1.7. Yields stay higher on 10s by 4 basis points to about 2.03 at the front end by a single basis point to 158. Tom, not a perfect science, but this is what I'll be thinking about increasingly now. If you look at where PPI is, just prices at the factory gate still climbing, and look at where CPI is. If you take the official numbers, the data, the headline figure, 7.5%. Think about margins for corporations. How much of this can they pass on to the end consumer? And are we starting to get to that point in this story where there's just a little bit of pushback from the end consumer? Just how high is that price tolerance on the consumption end of things?
I wouldn't take that as a general tone. I'd take it as a diffusion across certain sectors that can pass it on and certain sectors that can. Mike, I want to take this inflation idea, and as you mentioned, Empire out of Buffalo, New York, Empire Manufacturing, it's better, but it's way below the optimism that was expected, and fold that into tomorrow's retail sales report, which I'm sorry, is now a bigger deal than it was 10 minutes ago.
Well, it's going to be interesting to see what Americans did. The feeling was, and we saw in December, that spending sort of pulled back a little bit. The increase smaller.
Are we just guessing?
At this point, I mean, we saw a decline in spending of 1.9% last month. So the forecast is that it's going to rise 2%. We hope that means that Americans are back to spending. The question has been services versus goods. And in the PPI, the index for services rose by 0.7%, and for goods, 1.3%. Goods had declined last month. So it looks like we're seeing a little bit more services industry spending, but even more still on goods. And that's the turn that the Fed's been waiting for that hasn't happened.
Mike, I'm actually surprised that markets aren't moving more because people were expecting there to be at least a little bit of a plateauing. We were expecting peak inflation discussions to really take hold this month. This doesn't really give any wind to that unless I'm looking at the wrong data. At what point do people say, wait a second, this is prolonged, this is going on for longer than we expected, it's not necessarily reaching that peak as early as we thought?
Well, I think what's happened here, Lisa, is the PPI is coming out after the CPI. So people are thinking this is the January PPI, that whatever impact it's going to have has probably already been in the inflation figures. There's not a direct correlation between the two, but it's not looking forward. And that may be why we're not seeing the rise that we had seen. We've also got some cross currents that are hitting now in terms of inflation that don't have anything to do with the traditional drivers, oil prices, natural gas prices moving because of the situation in Europe. And so we have to wait and see how those come out. They would show up more in the final demand figures, but not until February, probably.
Mike McKee, thank you. We've already had the January inflation surprise. We had it in CPI. PPI confirming the trend here. Things are still very hot at both the factory gate and for the consumer. Tom, your next read on CPI, March 10th. The Fed decides on March 16th.
Absolutely, and the VIX comes back here. We had a 25 handle, now 26.44, so some of the ebb in the market here, but still green on the screen off relatively good news in Europe. Annetta Markowska joins now, Chief Financial Economist at Jefferies. Annetta, the inflation reports, plural, that we've seen signify more sustained inflation. Do you need to take a terminal rate year-end or end of first quarter 2023 and bring it up?
I would say, we should certainly be pricing more hikes into the curve. The question is, should we be pricing more in the next 6 months? And I think the answer to that, from my perspective, is no, because although inflation has, persisted a little bit longer than expected, we have some forward-looking indicators that still suggest that within the next few months, it will peak. And the fact is that we just don't know at this point how much of this will self-correct versus how much will ultimately have to be squeezed out by the Fed.
But what are some of those points? Are those points in CPI or are they in PPI, the Business Inflation Index? What are the tea leaves that give you confidence inflation ebbs after the two sets of data we've received?
So, look, one of the things that drives inflation is product shortages. And we've clearly seen that kind of build and intensify through the course of the last year. But those supply-demand imbalances, at least in the consumer product space, actually peaked around October. November, December, imports surged tremendously at a time where demand has sort of plateaued. As a result, we've built some inventories in the retail sector in particular, where inventories are at the highest level they've been since April of 2020. We're also starting to see some signs that inflation expectations on the part of consumers are rolling over. That was the case with the New York Fed survey that came out yesterday. The 3-year ahead inflation expectations declined pretty sharply, also to levels not seen since April of 2020. So I think that, consumers are recognizing that product shortages are not as acute as they were, say, in September, October, and it seems like that's what they're responding to.
Annetta, where does inflation have to come down to make you comfortable, to feel like the Fed can hike less than 7 times and still be complacent?
I think if we see the month-over-month trajectory kind of for core get down to 0.3 type readings, I think that will be enough to sort of stabilize expectations at the front end of the curve. When we're thinking about the longevity or sustainability of this tightening cycle, and is the curve priced for enough in 23 and 24, I think that's more of a question related to the labor market and the shape of the Phillips curve. And I do think that, those pressures will persist. Right now, it seems to me like the labor market is going to put a floor under inflation at around 3%, just given where we are right now in terms of wages, unit labor costs. So, so I do think that there is a piece of this inflation story that will have to be squeezed out by the Fed, and probably a 2% terminal rate is not enough to do that. But I just don't necessarily think that we need to be pricing any more than 7 hike into 2022.
Annetta, what terminal rate is possible to keep the economy from tanking? In other words, how much can the Fed hike before it curtails any kind of recovery and goes in the opposite direction?
I think it really has to do with that kind of speed and how they distribute those hikes, right? Because if they get to the neutral rate of 250 in 1 year, that's going to knock off a lot of, from growth next year and could potentially tip us into the recession. If they hike 7 times this year, which is our base case and which is what's priced into the curve, that's going to take off just under 1% from growth momentum in 23. Which is obviously a sizable drag, but not enough to put us in a recession. So it really depends on how quickly we get to that neutral rate.
Does someone want the meeting room at Jefferies? Is that what the banking is?
Apparently there's construction going on above me.
There we go. Annetta, we'll let you go. Thank you so much for being with us. Annetta Markowska of Jefferies. We appreciate it. Lisa, Annetta mentioned that New York Fed survey.
Yeah.
The first thing I thought when I saw it, who did they survey? Most people we talk to right now thinks this is it. This story's going to go on for quite a while.
Let's put into perspective that basically people are expecting it to decelerate a bit, maybe not to keep accelerating with respect to near-term inflation. This is just sort of logical if you look at the base effects, right? I mean, this is basically, if you go from 7% to 6.8%, okay, you're seeing a decline, but is it really going to materially change the outlook for people? At the same time, if you get a serious rollover, I mean, if you get consumers really buying into the transitory story, how much does that become a self-fulfilling prophecy?
You seen consumer confidence, Tom?
Yeah.
On Friday? Not looking good, decade lows. PPI's hot, CPI's hot. They do not feel good about this economy.
I'm not playing a parlor game, John, but I got to admit, it's absolutely fascinating right now. We need to see some more data come out. Retail sales tomorrow is a big deal, but I'm transfixed by where we are at year end. Critically, we don't know now, and I'm not sure on the 4th of July we can even guess it.
So my issue with the data at the moment, Tom, is just whether we can keep these margins up in corporate America. I mentioned that briefly, Lisa. I know you're focused on it too. For a long time now, we've passed this on to the consumer with very different, very little pushback whatsoever. And that's been a broad story. I just wonder if that continues at this point.
So Gina Martin-Adams and Wendy Sung of Bloomberg Intelligence put out this note where they basically said that company guidance for the first quarter earnings is actually falling dramatically, and by one measure, falling by the most going back to 2014, and it's because of exactly this point. So, has this been fully factored into pricing?
Lisa Bramett and Tom Keene with Jonathan Ferro coming up at 9 a.m. Eastern Time. So in about 18, 19, 20 minutes, we'll catch up with Jonathan Golub of Credit Suisse and why this man still thinks this equity market, Tom, goes north of 5K on the S&P.
He's been resilient and he's been tech constructive.
Very much so. Looking forward to catching up with him in just a moment. From New York, this is Bloomberg.
Keeping you up to date with the news from around the world. With the first word, I'm Ritika Gupta. Russia has announced that some of those troops involved in drills have started returning to their base. The military exercises had raised US and European concerns about a possible attack on Ukraine. The Kremlin has denied it is planning an attack. The European Union's top diplomat says he strongly believes a nuclear agreement with Iran is, quote, in sight. Joseph Borrell urged global powers to reach a compromise. Iran's foreign minister warned the US and other Western powers to show their true intentions by removing sanctions on Iran's economy. Hong Kong says it's overwhelmed by a growing Omicron outbreak, but there are no plans for a city-wide lockdown to bring that number of cases back to zero. Hong Kong is searching for more hotels to use as isolation facilities. And Elon Musk has reported that he gave about $5.7 billion of Tesla shares to charity in November. The donation was one of the biggest ever. The name of the charity wasn't in the filing. A large charitable donation would help produce what Musk claimed would be the biggest tax bill in U.S. history. The Pentagon plans to toughen oversight of mergers amongst defense contractors and take other steps to bolster competition. Authorities say that substantial consolidation amongst these suppliers poses a threat to national security. And according to the Defense Department, 3 decades of M&A amongst contractors have left the Pentagon relying on just a handful of companies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars,
We are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think we're getting closer to the top in the dollar in broad terms. But I do think what's kind of interesting is there's still some more dollar resiliency ahead. And now every central bank around the world, all policymakers actually are looking for stronger currencies. They're not telling you that, but you can see it based on what their actions and what they're doing. And the preference now is for a stronger currency. And that's helping to work off some of the inflationary pressures we have.
Mark McCormick there, TD Securities, very informative on Swiss franc as well. Swissy in the good news of Europe this morning, a little bit weaker Swissy. I do want to point out futures up 57. The VIX was a 25 handle, 26.32. The VIX much better in the last 24 hours, but a little bit off the enthusiasm of say 45 minutes ago. And critically, we are waiting for any form of headlines from Moscow. And with that said, we'll try to combine the threads of the week, the threads of this morning, with Damian Sassower, Chief Emerging Markets Credit Strategist for Bloomberg. And Damian, I just simply want to say, if I move west of Kiev, like the U.S. Embassy, and I go to Lviv, which is in the western end, 40 miles from the Polish border, and then I go sort of north by northwest-ish up to Warsaw, 200 miles away, the answer is Poland is there.
Yeah.
How does a Polish economy and Polish financial markets react to all that's going on in Kiev?
Well, I mean, Central and Eastern Europe are really feeling the inflation pressures, and they're accelerating, quite frankly, Tom. So it's not just Poland, it's Czech, Hungary, it's Romania, all of whom have hiked rates. But what's interesting, last week, Poland actually hiked by 50 bips, but it was a dovish rate hike because it wasn't 75 basis points. So they're scaling down in terms of the pace of their tightening cycle, which I find very interesting because we're getting to a point now where is the terminal rate? Mark McCormick was talking about that earlier. I mean, where is the terminal rate for many of these countries? And that's what the markets are trying to find out. And I guess Poland is one of the first to start scaling back at the pace.
You study this and you know the market dynamics. How beholden is Eastern Europe?
European currency bloc tracks the euro very closely, right? So, I mean, absolutely with Lagarde, I mean, look, I think we're pricing in 2 rate hikes at the end of the year by the ECB, probably like SEP-10 or something about that now. But I expect probably more to be priced in, certainly to the Central and Eastern European bloc. And places like Romania, who have been a little bit behind the curve. By the way, that's where the U.S. military base is. That's where our forward action is going to take place if there is indeed an incursion into Ukraine. Look out there as well. So, you know, certainly for me, that's where my eyes are focused. I think what you have to kind of start doing is maybe looking at those economies that hiked fastest, that hiked earliest, and maybe trying to fade that with some steepening here in the curve.
Okay, so the idea that fade that because that's already been priced in. This goes to the conundrum, as Mark McCormick is talking about, these central banks want a stronger currency. This currency war is for a different reason. How do you affect that with more rate hikes or fewer to strengthen the economy and allow more growth?
You are hitting the nail on the head, Lisa. Let me tell you what's going on here. Emerging market local currency debt is actually up year to date. Best start since 2019. Doesn't say all that much for it, but the reality is it's currency driven. And it's not just any currency. It's those currencies whose central banks moved early. It's Brazil, it's Chile, it's Peru that are all driving the gains you're seeing in EM local currency debt because they're currencies that have appreciated relative to the dollar. So if the markets are rewarding, you know, hawkish policy regimes by allowing their currencies to appreciate, that's kind of a new dynamic and something that I think markets need to take note of.
So, and on the flip side, I was surprised at renminbi strength on the heels of more easing. My head's spinning. There's no real consistency here to any of these measures in the same way that there used to be. How much does that make sense to you versus not, considering the easing that's going on?
Yeah, no, I mean, I would expect the yuan to depreciate here, certainly. I mean, if you just look at yield differentials, we've mentioned this before, the 3-year yield differential between China and the U.S. fell from 300 basis points to 48 basis points now. That's since November, Lisa. I mean, that's a huge, huge move in terms of the carry that's been sucked out of the market. So you're absolutely right. I mean, the yuan is obviously a managed currency, so you can't really read too much into it. But I'll give you 2 statistics here. commodities, the Bloomberg Commodity Index is up 11.1% year to date. Best start on record since 1993. And on the flip side of that, the Bloomberg Global Aggregate Bond Index down 3.5% year to date. Worst start on record.
Is that a bond bear market?
I guess that would be a bond bear market, Tom, for sure.
I got all these bond strategies telling me it's not a bond bear market. I'm like, let me think now. Yield up, price down. Okay. I got to stay on this. I've been looking at Romania all day. Of course, with Stoltenberg visiting there a few days ago with NATO. Is it pronounced the L-E-U?
You know, Miriam, just corrected me on that. It's the Leau, I think.
The Leau?
Yes,
Really?
Something, yeah.
The Romanian Sassour focused on the Romanian Leau. Seriously, it is a massive depreciation of 30 years.
Yeah.
How does EM ever get a bid if I'm looking at the Romanian Leau, USD, RON, and the Bloomberg folks? I mean, how does EM get a bid with the likes of the Romanian Leau?
Well, you need to see real rates start to improve, Tom. I mean, we've been calling for this. Inflation is still running hot. We expect that to decline in the second half of the year. As soon as that starts to happen, that is a perfect environment for offshore investors to begin taking advantage of what you're seeing, this carry, this embedded carry, the risk premium, the real yields that are embedded within a lot of these markets. That's going to happen, but inflation needs to come off first.
Damien, thank you so much for a briefing. On EM, Damien Sassour here. Where else are you going to learn about, Lisa? The Romanian love. I think McKee's got 10 Lau in his wallet.
Honestly, I think that you've pronounced it about 15 different times when you're 14 tries. I mean, I literally think you've gotten different things. Look, let's get back to the markets, because I actually think this is a really compelling day. You saw that hotter than expected PPI print. It didn't make a dent. It was considered backwards looking. Again, this goes to the Fed is data dependent. What data are they looking at, especially if you are continuing to get that hotter than inflation kind of read? Still very much the focus is on easing tensions and this sort of appearance of that, and that's led to this more constructive environment. But the NASDAQ isn't outperforming as much as it was earlier. How much is it really going to be the most sensitive one to inflation as we go forward?
I like your analysis, but I, on a hyper basis, Lisa, am going to move to the discussions out of Russia. And the headline moments ago across the Bloomberg, Putin-Scholz talks over after slightly over 3 hours. What that means is you need to pay attention rather to Bloomberg Radio and Bloomberg Television through the morning, because we are going to see a set of headlines, Lisa, here that could actually shift the moment.
What's the most interesting thing that you've learned so far on this altercation, on this conflict that seems to be building with Russia and Ukraine?
What I'm learning about is my ignorance of the Black Sea. I'm learning a lot more. I've got to watch James Bond from Russia with Love, which is the best Bond movie, again,
all right,
about the Dardanelles and, the Straits there. And, when I'm sorry, but this 18-mile stretch, I believe it is, through Turkey, past Istanbul, past Constantinople, into the Black Sea. What is the U.S., what is the NATO presence going to be in the Black Sea? That's the one thing I'm focused on.
I was struck by what Peter Trubowitz said, that this is a distraction for U.S. foreign policy when they want to turn their eyes toward China. And how do they get back to that narrative at a time of trade and inflation and a deep shift in the globalization of the pre-Trump era? And honestly, that is going to be fascinating to see them try to navigate.
We will see how that, and of course, good programming here with 12 noon today. Balance of Power will drive forward those conversations. And also, sound on Joe Matthew tonight, 5 p.m. on Bloomberg Radio. He had Leon Panetta last night, which is... I believe he had Leon Panetta last night, I should say. With futures up 53, please stay with us. With headlines from Moscow, this is Bloomberg. Good morning.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The optics versus the substance. From New York City this morning, good morning, good morning. The tone, the optics, the perception improves. Equities up by 1% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, the escalation, hopes.
We're certainly seeing a sentiment impact.
The huge diplomatic effort going on here.
This is what the market is looking for.
We're not seeing a sustained equity market contagion.
We're seeing a lot of uncertainty right now.
When I'm looking as an investor,
where the de-escalation is actually happening on the ground.
Geopolitical risk is one of those things.
We are in somewhat of a hot mess.
You really can't get your arms around.
We've been sort of cautious in general to start the year.
Markets do not like uncertainty.
Don't think an outright ground invasion of Ukraine is in the cards.
If tensions ease,
as long as they keep talking,
Ukraine and Russia,
it's all good.
Joining us now is Bloomberg's Maria Tadeo in Brussels and Bloomberg's Anne-Marie down in DC. Maria, I want to begin with you. What we're hearing right now, the difference between optics and substance, perception and reality.
Jonathan, this is so important at this point, and every official that I've spoken with today, particularly those in Eastern Europe that really know how Russia operates and that really know the Russian tactics, they say we'll believe it when we see it. Yes, it may sound encouraging. Yes, this may be optimistic, but we've seen Russia do this before. They say A, but in reality they do B. I'm also reminded that when you look at the troops in Eastern Ukraine, this is a war that's been going on for 8 years. Sometimes they pull them back, but then they bring them back. So there is a lot of concern about just how honest Russia is being right now. And I would also point to the words of the NATO Secretary General who's just speaking right now. And he says what we're looking at this point is Russia, but he also mentions China. He says these are two authoritarian countries that are operating together to dictate the terms for smaller countries. So the tone really, when you look at the European side, and I would argue it also applies to the United States, NATO, and the Western allies, is that at this point, they really don't believe what they see. They want to see the proof. And at this point, they're not getting the evidence that they were hoping to get.
AMH, your reaction?
Well, we haven't heard yet, Jonathan, from the White House, but I imagine, as Maria is saying, this will be very much so. They want to see the proof. The Ukrainian foreign minister took to Twitter about 45 minutes ago saying, we have a rule in Ukraine. We don't believe what we hear. We believe what we see. And I imagine that is exactly what the White House is going to say. We cannot discount the urgency we have seen from this White House. They have moved the U.S. embassy personnel from Kiev to Lviv, which is just about 70, 80 kilometers from the Polish border. They are clearly concerned based on the intelligence that they are getting. And then, of course, you have the NATO Secretary General this morning saying everything is in place still for a Russian attack. And when you look at what Russia was saying in terms of pulling back the troops, it was a video with the Defense Ministry spokesperson showing this video, very much so like yesterday's performance from President Putin and Lavrov and the Defense Minister, very much so, Jonathan, for a domestic audience.
The Chancellor Scholz with Vladimir Putin today, Maria, that meeting ongoing. Are we expecting a news conference from that?
We are expecting it, and the tone will be so important. And everything, in fact, about this meeting between Olaf Scholz and Vladimir Putin will be key, from the tone, the mannerism, and the way the two interact. The German the German Chancellor is under huge pressure to show that Germany under Scholz is tough on Germany, that there will be real sanctions. That Germany, by the way, is willing to take the economic pain that will come with sanctions. And by the way, the biggest question of all, it's Nord Stream 2. Yesterday, when he was asked again, Olaf Scholz says if there's an invasion, we, quote, will know what to do. Whether or not he tells that to Vladimir Putin to his face in his home territory, that is the key.
Just one final question from me to you, AMH. Help us all understand what happened in Russia's State Duma today. They're trying to get the Russian president to sign off on something quite complex, nuanced, and complicated. And I want you to go through it piece by piece to help us understand what's happening.
It's incredibly complex, and we should note that Russia has its own domestic politics the way every single nation does. So what you have is one group that was pushing for the president to outright say that these regions in Donbass, where there's been fighting since 2014, 2015, there's been fighting in East Ukraine for years. We should make that clear. They want to recognize them as part of Russia. Now, Ukraine immediately says this would go against the Minsk Accords. And right now, what we do know is that Russia helps supply these areas, but they are out there on their own. You have separatists fighting from each regions in these areas. What I think is interesting is potentially, Jonathan, this could just be a leverage point for President Vladimir Putin. What he really wants is those Minsk Accords, the way Russia interprets them, because it's ambiguous, the way Russia and Ukraine interprets the second Minsk agreement signed in 2014 under President Petro Poroshenko for Ukraine, which ended a ceasefire, by the way. That is why those agreements came into account. Under those Minsk Accords, what President Vladimir Putin would want to do is basically have political control over these regions in East Ukraine. And with that political control, those regions could block foreign or domestic policy that Ukrainians are trying to pursue in Kiev, notably joining the European Union or joining NATO.
Anne-Marie, AMH down in D.C. with Maria Tadeo. That news conference taking place right now with the Russian leader and his German counterpart, Olaf Scholz. Vladimir Putin on the screen at the moment. When we start to get some headlines, we'll work through them for you. For the market right now, at least, it's a bounce in equities, yields higher, crude lower. WTI down by 3% to 92.58. Brent down by about 2.8%, down to 93.83. The oil piece of this story at the moment is fascinating. I want to bring up this quote from the Washington Post a little bit earlier this morning. The domestic issues for this administration, their relationship with what's happening on the international stage. Here's the quote. The White House and the top Democratic lawmakers are beginning to weigh a new push for a federal gas tax holiday, potentially pausing fees at the pump as part of a broader campaign to combat rising prices. Let's bring in a team and have the conversation right now. Judy Beale of Kane Anderson Rudnick, Jonathan Golub at Credit Suisse, and JP Morgan's David Leibovich. Judy, this inflation story, hot PPI this morning, hot CPI last week, crude still in the 90s. How big of a problem is this for corporate America?
I think that if I think about things I'm grateful for, one is that I'm not a CEO right now, because what they're trying to manage is rising prices across any supply chain, their wage costs going up, instability in terms of capital markets, and now, a little war that might be happening, geopolitical problems. So it's a real challenging environment for most CEOs. And as investors, I think we're looking to businesses that have been through entire cycles and that can manage through this level of uncertainty. That's the kind of stocks we're most interested in.
John, I'll say this up front. You're still incredibly constructive on this market. You're looking for something north of 5,000 year-end, but you do say investors are overly anchored to low inflation. What is it about that that's important, John?
Yeah, I look at Bloomberg, and one of my favorite features is ECFC, and it tells you where the consensus is among economists in terms of inflation and economic growth. And the majority of economists on Wall Street still believe that we're going to end the year with inflation something in the ballpark of less than 3%. Now, while I do believe that inflation is going to come down off of these levels a bit, I think that under 3% by year end is entirely unrealistic. And you're going to have a very strange situation where the Fed and Janet Yellen and Treasury and consensus among Wall Street is that things are going to fall. They'll get it directionally right, but the level of that fall, the pace of that fall is going to be nowhere near what they expect.
David Leibovitz, let's take the John Golub view of the world. PPI is looking hot, inflation is looking sticky. Just how much price tolerance is out there for corporations to pass this on?
So it's interesting because we have seen corporations respond to these higher input prices over the past, call it 12 or so months by passing them along to the end consumer. I think there are obviously limits to the amount that prices can go up before demand begins to wane. But, I too am fairly constructive on where this market is heading, because it's important to remember that it's the nominal growth story that matters for corporate profits. So even in a quarter like the first quarter, where we think real growth is going to slow, again, we think that revenues are going to hang in there due to this pricing power that is relatively apparent across corporate America. That very well could lead demand to fade during the second half of this year, and that could arguably take some of the wind out of the sails of inflation. I agree that below 3% feels like a little much, but something around 4% seems perfectly reasonable. And so I think it's important to take a step back and really see the forest for the trees. There are a lot of cross currents that are going on right now, which are going to have a material impact on what the economy looks like in the second half.
Julie, I want to circle back to something you said at the start of the conversation. You said you looked at companies in leadership that have performed well in dicey times before, through recessions. Does that mean that you're preparing for the end of the cycle, or you just think that that's the comparison that you think works for the moment we're in?
Well, I think for us, we try not to predict too much. We try to just prepare ourselves, and generally businesses that are well positioned through recessions are good businesses through an entire cycle, because we're long-term investors. But I would say I am concerned by the level of inflation, because it's really not up to the Fed. The Fed is being dictated by inflation. And if it really wants to manage it correctly, if it continues to spiral the way it has been, and if that actually changes consumer demand, because we are in a consumer economy, I think that's really problematic. And that's where we need to be focused on is, does the Fed break the back of inflation by being really aggressive initially out of the gate? I mean, if you had asked us 6 months ago, would they be considering a 50 basis point rate hike in March, everyone would have said no. And here we are.
Julie Bill, sticking with us alongside Jonathan Golub and David Leibovitz. Let's get you some stock movers going into the opening bell. About 20 minutes away. Here's Abby.
Hey, John. Well, we, of course, have stock futures sharply higher, up more than 1%, perhaps snapping a 3-day losing streak for U.S. stocks. And, of course, big tech really leading the way. Making this interesting, of course, is the fact that yields are higher, too, but investors don't seem to care, as we have Apple, Microsoft. We also have the chip space rallying in an even bigger way. NVIDIA and AMD both up more than 3%. NVIDIA, of course, does report on Wednesday. So it seems like there's a little bit of a relief rally, a bounce around geopolitical events. Energy supports that idea as well. We have the energy sector down, oil down too, after briefly touching $95 a barrel yesterday. Its highest level since 2014. ExxonMobil, Chevron, and Halliburton all down more than 2%. Again, it looks like we have a relief rally around subsiding geopolitical tensions, John.
Abby, thank you. Some headlines coming out of that news conference with the Russian President Vladimir Putin saying he had a frank exchange on Russian security initiatives, that Nord Stream 2 is technically ready to ship gas. I'll bring you some more headlines as that news conference continues, and get the views as well from the German Chancellor, Olaf Scholz. Coming up on this program, away from the geopolitics, investors bracing for a global tightening cycle.
In view of the current uncertainty, we need more than ever to maintain flexibility and optionality in the conduct of monetary policy.
That conversation coming up next.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening. So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Any adjustment to our policy will be gradual. Our target is an inflation rate of 2% over the medium term. To achieve this, we will take the right actions at the right time.
The ECB President Christine Lagarde there, ongoing right now in Moscow, a joint news conference between the Russian and German leaders, President Vladimir Putin and Chancellor Olaf Scholz. The headline coming from Olaf Scholz at the moment, important that Germany and Russia continue talking. That from Olaf Scholz. Earlier, the Russian president saying ready for more talks on security with the US and with NATO as well. Just this change in tone, this shift in the last 24 hours, whether you think there's been a change in substance is another question, but the change in tone enough for this market just to generate a lift for equities, equities higher, yields up, yields higher, crude lower. Looking at crude right now, WTI and Brent tracking lower by more than 3% on Brent to 93.51, on WTI by 92.20. I'll keep tracking these headlines for you, but if this settles in a favourable way, you would hope for the ECB unlocks a conversation about doing something soon to respond to what's happening on the inflation front. The conversation has shifted in a big way. We're actually thinking about doing something at the ECB. It has been 10 years. The conversation shifted for this market into the summer. They're pushing that back out all over again. For Jim Bullard of the St. Louis Fed at the Fed, he's very focused on March, the middle of March, and the potential for a big move. He reiterated his hawkish view, saying this: I do think we need to front load more of our planned removal of accommodation than we would have previously. Our credibility is on the line here, and we do have to react to the data. Reacting to the Fed speak is Mike McKee. Morning, Mike.
Morning, John. Well, I think one of the big things that Christine Lagarde was saying that people have overlooked is she said they'll do the right thing at the right time, which may be a different timing from what Jim Bullard sees for the United States, especially after the producer price index this morning came in at twice the rate economists had forecast, 1% on the month of January. That is double the 0.5 that we thought we would get. The core rate comes in up 0.8 on the month. So bad news for the PPI, and that does suggest that there are still a lot of inflation pressures in the pipeline. Now take a look at what's been going on with services versus goods. And the thing is that goods prices had been going up because of supply chain problems, and that's an issue given the fact that we bought so many goods we can't get stuff. The services prices disappeared as people stayed home, but now services prices are rising and goods prices are still rising. So inflation becoming more embedded in the economy, and that's a problem. What does the Fed do about it? Well, that may depend on who's on the Fed, because today, John, the Senate Banking Committee is voting on the nominations of all 5 of President Biden's picks for the Fed, Jay Powell and Lael Brainerd to be chair and vice chair, and then Sarah Raskin and Lisa Cook and Philip Jefferson to be members of the board. They're all expected to get through, but Sarah Raskin could get through only perhaps on a tie vote, which would mean the Senate would have to take extraordinary steps to bring her to the floor. And of course, we're still waiting on the senator from New Mexico, Ben Ray Lujan, to come back. So for a while, the president's choices may be on hold, and the Fed may have to somewhat shorthandedly go after inflation in March.
Mike McKee, thank you, sir. Trying to do two things this morning, so bear with me if you can. Working through this news conference taking place in Moscow at the moment, then we'll return to the Fed conversation as well. If you can get those pictures back up, that conversation taking place, the news conference in Moscow, in Russia, with the German Chancellor Olaf Scholz, and then the Russian President Vladimir Putin. Olaf Scholz, the German Chancellor on your screen right now, saying the following: the current crisis is the most serious in Europe for some time. Can't see any justification for Russian troop buildup. We must continue to seek a peaceful solution to conflict. Again, I'll try and keep on top of that for you. That's the conversation taking place in Moscow, Russia, in that joint news conference. Back with us, Judy Bill, Jonathan Gollop, David Leibovitz. Jonathan Gollop, I want to come to you. David Kostin of Goldman dropped his price target year-end on the S&P from 5,100 to 49. He said it was not about earnings, it's all about valuations. And when they put out their forecast back in November, they saw 2 hikes this year. Now they see 7. My question to you, John, would be, we're pricing in more hikes. Why haven't you moved?
Well, I mean, first of all, I agree with David Kostin that the earnings are going to be terrific this year, and there's very little indication that the earnings are softening. As far as valuations are concerned, the multiple of the stock market at 19.5 is 3 multiple points higher than it was a little over a year ago. So the stock market has already really reflected a fair bit of this concern. And as far as the Fed moving 7 times, maybe they will, but they're only going to do it if the market allows them to. This whole question of whether the Fed is going to crush demand and crush the economy to bring inflation in check, it's just not going to happen. The Fed will try to move rates off of 0. I mean, we haven't even done a rate hike yet, but the idea that they're going to, push us into recession, which is effectively what's being implied by David Kostin and some others, I think is just not going to play out.
Judy Bill, your thoughts on the same topic, please.
Well, when I think about the Fed, right, I think it's important to remember the dual mandates of the Fed. Those are inflation and unemployment, right? That's the wife and kids. Investors are kind of more the side piece, right? It's important to keep us happy to a certain extent, right? But the mandates are still unemployment and inflation. And I think if inflation continues to get out of hand, it has long-term detrimental impacts to the economy. And so that is really where the loyalty lies. So I think, hopefully we can see some kind of inflation pullback on supply chain concerns. But I'm concerned that it really won't be up to us as investors and satisfying investors, because we have to think of the long-term impacts of what extremely hot inflation can do.
David, final word.
So, I mean, I think it's important to recognize that there are a lot of these cross currents, as I was saying earlier. It's going to be challenging for them to coexist, right? We're not going to see Russia invade Ukraine, energy prices spike, prices go higher at the pump, and a Fed that hikes 7 times. And that seems to be the sentiment in the market, that everything that can go wrong will go wrong. I think that the Fed is going to react to the data. There's something that was very overlooked during the press conference in January was the fact that Jay Powell mentioned the word decision something like 15 times, but 14 of those 15 mentions were in the context of no decision has been made. And so the Fed is going to react to the data as it comes through the door. And importantly, from a purely mathematical perspective, inflation is going to begin to cool off during the second half of this year due to more favorable base effects. And so I think a lot of people are putting the cart before the horse on the Fed right now. They're going to make decisions that they see fit based on the way the economy is running in the second half.
We'll come back to that. David Leibovitz. Jonathan Golub, Julie Bill, sticking with us, reacting to some of the headlines we've had in the last 24 hours. Crude lower by more than 3%, almost 4 percentage points lower on WTI right now at 91.91. Keep talking about going back to this news conference, this joint news conference with the German Chancellor Olaf Scholz and the Russian President Vladimir Putin. The headlines from the German Chancellor read as follows: "It's our duty to avert military conflict in Europe. Lasting security only achieved together with Russia. Russian aggression would have serious consequences." Goes on to say, apparent Russian troop withdrawal, a positive sign. I'll return to that when we need to. Coming up, the morning calls, and later, Morgan Stanley, said to be among block trading firms facing a US probe. More on that just around the corner. From New York, this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Three-day losing streak on the S&P, and we bounce a bit, 5 minutes away from the opening bow. Futures are higher by more than 1% on the S&P, on the Russell, on the Nasdaq. If you switch up the board and get to the bond market, yields up, equities up. For now, at least, yields are higher by a few basis points on 10s by 5 to north of 2%. On 2s by not even a basis point right now to 157.53. Equities are higher, yields are higher, crude is lower. Just a little bit of relief off the back of some of the softer headlines we've seen so far out of that news conference in Moscow, Russia. That's the price action. Here are some of the morning calls. Bank of America downgrading the gap to underperform. The analyst expecting slower sales growth due to continuing supply chain disruptions. Your next call from Wolf Research upgrading American Airlines to peer perform. The analyst expecting shares to transition from lockdown laggard to reopening winner. And finally, Wells Fargo cutting its Twitter price target down to 42, highlighting management's ambitious forecast amid increasing growth headwinds. Coming up on the program, the biggest banks, including the likes of Morgan Stanley and Goldman, could be under the microscope, with US authorities said to be scrutinizing their block trading practices. That conversation up next.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Happening right now in Moscow, Russia, the Russian President Vladimir Putin in a joint news conference with Olaf Scholz of Germany, the Chancellor, saying that a partial troop pullback decision has been made. That unlocks some gains right now on the S&P. Futures up by more than 1%. That's been a story of the last 12 hours or so. Futures positive on the Nasdaq by 1.5%. We drift higher here. We push higher. We bounce after 3 days of losses. Switch up the board and get to the bond market. The yields are higher too on 10-year treasuries by 5 basis points. Call it 6 to 2.04%. On crude up by 3.9% to 91.70. We're down rather by almost 4 percentage points. And euro dollar is positive by 0.4% at 113.49. Opening higher then on the S&P 500, about 25 seconds in, advancing 0.9% on the S&P. At the bottom of the pile, no surprise given what's happening in the commodity market. Energy equities are down by 1.4%. Consumer discretionary, top of the pile by 1.44%. Looking at some of the movers around the open, here's Abby.
Hey, John. Well, we are certainly looking at a nice snapback rally here. The first update in 4 for the major indexes. And as you were just mentioning, it's all about tech up, energy down. Taking a look at some of those tech names, despite the fact that you have yields higher, it seems to be truly havens are selling off there, so not pressuring valuation on Apple and Nvidia. On the other hand, with crude oil down 4%, as these geopolitical tensions seem to be easing a little bit, you have Chevron and Schlumberger both down more than 2.5%. We also have some deal action to take a look at. Intel is buying Tower Semiconductor for $53 per share. Not surprisingly, Tower Semiconductor is soaring, up 41%. Intel actually flat, often the acquirer is down. And then there are headlines around the idea that Monster Beverage and Constellation could put together some sort of deal. Monster Beverage, the company that would be acquired, up about 2.1%. And then finally, with yields higher, we do have banks higher. This was not the case yesterday when yields backed up in a big way. Banks were actually down on the geopolitical tensions, but today you can see JP Morgan Chase, Bank of America, Citi, and Wells Fargo all up about 1% or more, John.
Abby, thank you. Can we bring Maria Tadeo back in from Brussels? An important part of this news conference just taking place between the German Chancellor Olaf Scholz and the Russian President Vladimir Putin. Maria, this headline right here, I want you to translate for our audience if you can. The Russian president says, we'll review the Duma initiative on Donbass separatists. Russia will work within the Minsk Pact on Donbass. Can you walk us through that?
Well, this is a very complex situation, what is happening here. And we have to almost go back 8 years time to understand what is going on in Ukraine. These are regions in eastern Ukraine which have been fighting for years now. These are separatists that, of course, want to break away from Ukraine, potentially join Russia. There has been many criticisms for years that Russia is, in fact, supplying also weapons, and this has been a deadly war for years between the two sides. Now, today, what the Russian Duma is suggesting that Vladimir Putin says is to recognize the independence of these regions, so they would break away from Ukraine. Of course, if you're Zelensky, but also NATO and the Western allies, you would look at this as a move by Russia to break away further pieces from Ukraine, and this is a violation of the territorial integrity of the country. The other issue, of course, is that it would call into question the ceasefire and the Minsk agreement that was agreed between the two sides. The problem, of course, is that the Russians say the Ukrainians do not comply with the terms of Minsk. The Ukrainians say, by the way, the Ukrainian side of this is being complied with, but it's the Russians that are using this as a way to further penetrate and destabilize our country.
Maria, thank you. And stay close as well as these headlines keep coming through. The Russian president saying France and Germany should push Kiev to implement Minsk. A separate headline coming from Interfax. They were responsible for a story that came out overnight that really unlocked some higher gains in this equity market. The Russian army moving tanks and armed vehicles from Crimea. That headline just crossing from Interfax. This is the Russian administration, the government suggests a partial troop withdrawal is taking place. That news conference ongoing. Remember, crude lower off the back of a lot of this, equities higher, yields higher. Another report on the banks that I think is kind of drifting past the radar at the moment that we need to get on top of. It's this one. Bloomberg reporting the following. The Journal led with this, and now we've got it too. Banks have long strived to keep a lid on the unregistered stock offerings. This is block trading, to reduce the potential for stocks to drop while arrangements are being made. Yet price declines before the trades have raised concerns for years that some investors may be abusing access to confidential information. This, as we're reporting, and others are as well, that Morgan Stanley and Goldman's could be under the microscope for block trading. Let's get some more details now with Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, U.S. authorities are taking a look at this, and they have been for some time. The SEC first opened a probe into block trading back in 2018, and then the Department of Justice actually opened their own subsequent probe later on. Usually, of course, in these block trades, investments acquire a bunch of stocks at a discount from investors, and then they typically negotiate sales outside of market hours in order to reduce the potential for those stocks to drop while that transaction is being completed. But as you said, on occasion, the stock prices actually drop before it happens, which raises some concern about who has access to this information and whether or not it's being misused. So that is what is being investigated. Multiple firms, we understand, have received inquiries, but it's not clear if any are suspected of wrongdoing or if any charges are necessarily going to follow. But obviously, this is centered in a big business for a lot of these investment banks, specifically equities trading, which pulled in $32 billion in revenue for the top firms on Wall Street. Last year, that number was $7.5 billion for Goldman Sachs and $11.4 billion for Morgan Stanley, which, just to reiterate, are two of the firms who have reportedly received requests for documents. All that said, though, John, it's not dragging on the shares of these stocks or of other brokers this morning. They, in fact, are all higher to the tune of about 1.5% or more. Of course, that comes amid a broader risk-on day and, of course, rates moving in the bank's favor this morning, John.
Katie, thank you. Back with us, Julie Beale, Jonathan Golub, David Leibovitz. John, I won't ask you to comment on what reportedly is an ongoing probe, but I will come to you on the banks themselves. Nice lift. People looking for rate exposure through much of this year on both sides of the Atlantic. Is that a sector you like, John?
We're not huge. We're not huge fans of the financials. We think that the yield curve is going to flatten over the course of this year, even though rising rates help a number of banks. And we think that M&A activity is going to be rougher compared to where it was last year. So if you're making a pro-cyclical call, we'd rather you do it in old economy stocks, energy, materials, industrials, discretionary. But there's no question that a pop in, a move up in short rates is a big help for a lot of banks.
Julie, where's your sector focus at the moment?
Our sector focus continues to be more so on companies that are well positioned. So I like names like a Fair Isaac, an Old Dominion, a Bentley. Again, these are names that I can go back to and see how they have performed in difficult economies. So it's less of a sector focus and it's more of a stock focus in terms of quality earnings, that sort of thing. And basically just doing everything I can to avoid EVs.
Everything you can to avoid EVs. Just go back to that, Julie. Why?
You know, I learned a lot during the Super Bowl, not so much during the halftime show because I know all the words to those songs, but it was amazing to me how many car companies are coming out with EVs. And so while I appreciate the new look and feel and technology behind the Rivians and the Lucids, at the end of the day, these are companies that are bending metal. And that's generally not a fantastic business from a capital returns perspective. So I think overall, it's going to be a much more competitive landscape, much more challenging. And these are smaller companies that are going up against ones that have tremendous marketing budgets and great distribution.
I also knew all the words. I think that says something about how old we are. Now, Julia, maybe we're getting old, but I'll leave that to one side. I felt that way on Sunday evening. David Leibovitz, your sector focus, please.
Of course. So I would say that I'm a little bit more constructive on the banks than Jonathan. I think that there is a shareholder yield play there, which may become more interesting as the year goes on. You know, the one area that we haven't touched on, and I would agree with a lot of the views that leaning into cyclicality makes sense, but one of the areas that we haven't touched on is what to do about technology. You know, obviously the Qs were at the heart of the sell-off that we saw at the beginning of this year. We've been getting a lot of client questions around how you should be thinking about allocating to tech and growth. And one of the things that we've noticed is there's massive earnings dispersion within the technology sector. You know, there's a big difference between the companies that are making money and losing money. And so when it comes to that part of the market, very much taking a price to earnings growth approach where we're looking for things that are reasonably valued so that the multiples don't get crushed as rates rise. But we want to make sure that the earnings are there. You know, in a rising rate environment, earnings will set you free, because if the earnings are there, the multiples eventually get to a point where somebody sees value and steps in to make the other side of the trade. And so, you know, laser focused on the earnings as a guiding light for investment strategy this year.
John, I want to come back to you and ask you about the banks and why you don't like them, given that this is an economy that you think will continue to do well, earnings will be decent too, and if you're looking for some optimal exposure to the cycle, where you get it from at the moment, if it's not the banks, where is it?
You know, first of all, you know, so I wear two hats, both as the chief strategist and head of quant research. And when we screen on things quantitatively, the banks look a lot more attractive. But when I look at it top down, first of all, the financials, broadly speaking, are expected to see a contraction in their profits next year of about 10%. If you look at other cyclicals, they're supposed to see profit growth of about 30%. This is in 2022. So that's a massive difference, up almost 30 versus down 10 for financials. M&A activity is going to weaken. A yield curve flattening is a little bit of headwind. Now, we were long financials all year last year. That ended up being the best sector in the S&P, even though most people probably thought it was tech. And we downgraded at the beginning of this year. So, you know, I think that there's kind of a number of headwinds that they're going to be facing, even though the economy is going to be pretty good.
John, you don't sound like a man that's looking for 5,200 on the S&P year end. I mean, that's some real upside. John,
and by the way, John, here's the key. I'm a little offended. I didn't know the words to the halftime song.
I don't know what generation that puts you in, John. Jonathan Golub and David Leibovitz, thank you. And to Judy Beal for, I think, the line of the week, that the Fed has a dual mandate. It's the wife and the kid, and the investors are the side piece. Judy, I let that slide. I'll return to that another day. Julie, thank you. Thank you very much. Just getting this story coming out from the team down in D.C. I want to bring you the lead paragraph. We get some votes today, this week, on some of the Fed picks from this White House. This is the lead paragraph. Take a listen to this. The top Senate Banking Committee Republican, that's Senator Pat Toomey, has discussed trying to stall Sarah Bloom Raskin's nomination as Vice Chair of the Federal Reserve by having GOP members sit out of a vote on sending it to the floor. This is according to 3 people familiar with the discussions. Some really interesting developments taking place down in Washington, and some great reporting led by Jen Jacobs and the team down in D.C. We'll stay on top of that for you. Up next, out of growth and into cash.
Cash is extraordinarily important. Liquidity is extraordinarily important. There are times when being fully invested is not the way to go.
We'll catch up with Bank of America's David Jones on the latest fund manager survey next.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Right now, caution is the name of the game. Being defensive is the name of the game. Cash is extraordinarily important. Liquidity is extraordinarily important. This is going to be a very volatile year, and it is the strong that will survive and generate returns. So definitely this is, so far cash has beaten everything over even the last 1 year. If you look at, across credit, any area of the fixed income market. So I think that proves that there are times when being fully invested is not the way to go, when you need to be defensive.
So we've heard this now from JP Morgan, from PIMCO, from BlackRock. The reasons to go to cash maybe, just a little bit. Goldman Sachs, Christian Muller-Glissman saying the same thing earlier this week. And some of this was captured in the Bank of America Fund Manager Survey, just going through some of the highlights and some of the headlines too. Just that cash allocation, cash levels, the highest since May 2020. Taking a look, here's Abby.
Well, John, the other side of that high cash allocation is tech investors being the most underweight since 2006. So clearly there's a bit of a cautious, even a bearish tone relative to the latest B of A survey. As for the tail risks that we're looking at, not surprisingly, the most systemic, of course, so hawkish central banks, and then closely tied inflation, the possibility of asset bubbles, global recession, and as if all of that weren't enough, we of course have these Russia-Ukraine tensions. But the most systemic of those risks, probably hawkish central banks, of course, driving the liquidity or driving liquidity out of the system. And as for the number of hikes that investors are expecting from the Fed this year, 4 is the greatest number, followed by 3. It's interesting that 6 or more than 6, that's the least supported. So it seems as though investors think that 4 or 3 rate hikes are ahead for the Federal Reserve. And then finally, returning to that cash is king. That's, of course, what caught my eye out of this survey as well. 38% of the investors that were surveyed are overweight cash. Now, followed closely by equities and commodities. But again, cash is king. Bonds, not so much. Not a lot of love there, John. 72% are underweight bonds. Again, 38% of investors favoring cash in this volatile and difficult environment.
Abby, thank you. Here's the quote from that fund manager survey that got my attention. Investors are bearish, but not extremely bearish. We remain negative on credit and stock returns in 22 as well.
Okay, traders, let's place stop for our euro. I'm going to place stop at 113.43. Please do so. Please place your stop, and you you secured your position. Anything can happen. It will move, can move rapidly anytime. But in this case, you secured your position that you will not lose this position in at all. In our case, we placed 2 pips. It means we will be in profit to £200. And anytime, probably I will move even to higher level. If it will go even below because it's short position. Lower it will move, more profit I will get. Yeah. So let's see where it will go. I'll speak to you later. Well done, guys. All of you who decided to trade with me, to follow my trades. It took us, as you can see here, we placed short position at 1 o'clock, and at 10 to 3, we already in profit. Yep. And right now I am placing a stop to 113.40. It gives us £500 in profit. Please do so. Please place your stop to this level. I'll speak to you later, guys.
Capitulations yet to come.
So, David, let's talk about two things. I can hear it from what you're saying. The probabilities of recession, bear market, investors are pricing it too low. You think we have to adjust. Let's think about where we've really rebuilt an overweight in the last 12 months. The UK, EM, energy, you can see it. It's in the survey. Are you saying fade that?
Well, certainly investors have gotten a lot more cyclical, and they've taken on additional exposures to that. Exactly as you said, emerging markets in the UK. We think there is, some potential upside there, but we think that needs to be barbelled with a defensive exposure as well. We have been out there pounding the table about staples and utilities, which still have not really rallied and have, fairly attractive valuations. We think they make a very good macro and market hedge.
Where do treasuries fit in now for you, David? Where do they fit in?
Yeah, this is going to be interesting to see because we've obviously had a very sharp flattening of the yield curve, but we have really yet to see the growth scare. We've had a rate shock, but we have yet to see the growth shock. We think that is a second half event for this year. And if things do follow the scenario, which we think is very likely, that there will be recession concerns as the yield curve potentially inverts, and that we have a growth scare because of a very aggressive Fed and the pace at which it tightens. Well, then at that point, you may want to start thinking about reallocating into the long end of the yield curve, out of U.S. dollar, short-term short rates and into the long rates.
David, always appreciate this time with you every month. It's valuable to us, so thank you for offering it to us. David Jones of Bank of America. I want to turn back to that story down in Washington, D.C. and catch up with Bloomberg's Anne-Marie. AMH, what are we learning down in Washington ahead of what's meant to be a straightforward vote?
Yeah, it doesn't look so straightforward anymore, Jonathan. You're seeing the top Senate Banking Committee Republican, Senator Pat Toomey, who for weeks we have heard his reserves and concerns over Sarah Bloom Raskin to take up one of the top posts in terms of banking regulation on the Fed, that they want to potentially try to block this nomination. And really a key question that we need to be asking is, how is this going to go forward? Because if they're able to block her nomination, what does this mean for the others, like Chair Jerome Powell and Lael Brainard? Will those nominations still go through, or will they get the Democrats on board to potentially put aside the nomination of Sarah Bloom Raskin so they can get the other remainder 4 nominees through? This is looking to be very tricky in terms of the White House's Fed nominations at the moment.
Do you think outside of Sarah Bloom Raskin at the moment, from the reporting that you guys are doing down in Washington, are any other picks in trouble here?
I don't think so at the moment. There is bipartisan support for the Fed chair. I would say potentially his nomination, although it looks likely that it's going to go through. Potentially the last week or so, there's been just question marks about, is the Fed moving in the right direction? And that, Jonathan, comes down to the data. And that was because we saw a 7.5% inflation handle.
AMH. Thank you. Thank you very much. Anne-Marie down in Washington. Jen Jacobs leading some of this reporting with the team. The top Senate Banking Committee Republican has discussed trying to stall Sarah Bloom Raskin's nomination as vice chair of the Federal Reserve by having GOP members sit out of a vote on Tuesday, today, to send it to the floor. This according to 3 people familiar with the discussions. There's a development for you to keep an eye on. That's some of the stories down in Washington and beyond. This equity market's doing okay, about 23 minutes in. From New York City, up next is your trading diary with the S&P up 52. We advance 53, up by 1.2%. From New York, this is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's a bounce, just a little bit of relief. 25 minutes in, equities up by more than 1% on the S&P, on the Russell, on the Nasdaq. On the Nasdaq up by 1.6%. That's the equity story. Here's the bond market picture. Two-year yields not doing much this morning, up a single basis point, just short of 160 at 158.76. Yields higher at the long end, so the curve's a bit steeper. We've been seeing a flattening curve over the last few weeks. It's steeper now, up by 5 or 6 on a 10-year to 2.04%. On 30s, up 6 basis points to about, let's call it, 234. 235. That's the price action. Here's the trading diary. The Senate Banking Committee voting on confirmation of Fed Chair Jay Powell along with Biden's 4 other Fed nominees at 2:15 Eastern. That vote gets a whole lot more interesting now. U.S. retail sales and the Fed minutes coming on Wednesday. Plus, we'll hear from Minneapolis Fed President Neil Kashkari. Initial jobless claims come on Thursday. And more Fed speak with Mester, Evans, Williams, all on the docket. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence. company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying.
Okay, guys, let's move even further. Our stop, and we're going to move to 113.35. Okay, please move your stop. We have 10 pips in profit. In our case, it's 1,000 pounds in profit. In your case, it's all about how much you decided to trade, you decided to invest when you decided to trade euro. Okay, I'll speak to you later, guys. Stay safe.
Thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi and so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was...
Okay, traders, as you can see, position closed. We made a profit £1,000. As you can see, we traded for a couple of hours, and that's it. I'll show you. Profit £1,000. Okay, we started trading. I'll show you where. From here. Oh, it's different line. As you can see, where we started started trading at 1 o'clock, as you can see. Sorry, I will remove this line. And I will do another line. I will do arrow. Okay? And we close trade just right here. That's it. We made a profit of £1,000. Well done, guys. All of you who decided to stay with me to follow my trades. You did made a profit. For newbies, for new guys, if you just start trading and wanted to find out the right strategy or how it works, how day traders work trading. This is how we do. This is how we make money. We have several screens. We use this strategy for many years. And this is how we make money. We move on to another pair, or if we will see something will be profitable with this pair, we will enter new position. But basically, this is how day trading works. Okay, guys? For our strategy, you can go to company.co.uk. You can get the strategy. Also, you can get you can register for webinar. I do personally, this will be live webinar. We don't provide recorded webinars, so you can ask any questions you want on the webinar. So go to our company website and you can find all necessary information. Okay, guys, I'll speak to you later. Stay safe and let's move on. Let's see what other pairs, what other chances today will bring us. I'll speak to you later, guys.
We're actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of two suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most